Okay, let me see if this works. Am I still echoing?
No, it's better.
No echo.
Righty. Okay, so we have a few new people, and then we have I guess the same crowd. Okay, what I wanted to do is kind of um go back to the beginning um because I think that at some point when we're busy finding our way as traders, we kind of um get off the beaten path, if you will. As traders, we go through ups and downs. Sometimes it's good, other times it's not. But until you find your legs, right? Until you find your success, you don't really know, right? You don't have any experience to fall back on. Uh, if you're a successful trader for a while and then you pick up some bad habits or you start doing some things that screw you up, you can always fall back to the time where you were successful and you found a level of success. So um, I always like to come back to the same video that did wonders for me. So before we get to talking about the pairs, I want to replay that video. The the cons of trading, right? The negatives of trading, things that kind of hold us back or prevent us from being successful. And then once we knock that video out, then we can get on these pairs. We have a lot of great setups coming up this week, but first things first. Uh, Especially because we have new people or people who haven't attended these meetings before. I think this is a timely message. All right, let me. Can you guys hear this video? It's very low on mine. Whether it's can y'all hear anything?
We hear, but we don't see.
Okay, hold on.
Short-term oriented trading space. That's right. 92% of every one of you listening here will fail. 92% won't make it, no matter what you do, no matter how hard you work at it, no matter what your intentions are. 92% failure rate, and not me, not any firm in the United States, not any firm internationally, not any expert, not any mentor, not any trader, not any trainer, not any mentor can change this statistical fact. It is etched in stone. 92% failure rate. Now breathe that in, traders. I need you to understand this. I need you to understand what you're up against, because you ultimately, at the end of the day, are going to have to answer this question, this one Very, very important question, traders. You're going to have to answer this. Do you understand? You're going to have to answer this. Do I have what it takes to be the 8%? Guys, this is a simple game, but it's not easy. There is a huge difference between simplicity and easy. It's simple. Markets go up, markets go down, sometimes they go sideways. 3 possibilities: up, down, sideways, up, down, sideways. That's a simple, rudimentary mechanism. But I am the last person on planet Earth that will tell you that this activity called day trading in particular is easy. It's not easy. In fact, it's one of the most challenging activities you as a human being will ever pick up. Do you know why? Because in order for there to even be a hope for mastering the market, you have to first master yourself. And let's face it, how many people actually master themselves in this world? How many people actually reach a point where they do what they say they're going to do? How many people really keep their promises to their kids, their wives, their husbands, their community at large, their societies, their personal God? Very few people reach the point in their life in anything where they have accumulated or accomplished self-mastery. But the only way to have any chance at success at this is to first master yourself. You can't take an unmastered you into the market and think that there's going to be success in the market. You can't take an undisciplined you and go find success. You can't take an untrained you and go into the market with your untrained self and think that you and your untrained state is going to pull money out of the markets. Won't happen. You can't be an ill-informed individual and take your ill-informed self into the market and pull money out of the markets. You can't take your unmastered self. You can't take your undisciplined self. You can't take your untrained self. You can't take your uneducated self. You can't take your uninformed self. You can't take who you are right now without changing yourself first. You can't take who you are right now and take who you are right now in the market and expect the market to give you money. So what must happen? You must first change. You must first go through a metamorphosis. You must first become educated. You must first become discipline. Discipline is not something you're born with. It's something you work on, like your muscles. You got to hit this thing up every couple of days, every day of the week, if you will, to build that muscle, to build that, to build that capability. You have to work on becoming disciplined. You have to work on becoming educated. You have to work on becoming experienced. This work happens first. And it is this work that transforms who you are. Then you take the transformed you into the market, and it is that transformed you that starts producing progress. But if you think that you can stay who you are without putting work into creating the change you need in yourself, if you think that there's just, I take this 2-day course and I go into the market, 2 days is not enough to change who you are. Take this 2-day course, go into the market, open up an account, and I should become rich in the next few weeks, then you should really find another freaking planet to work on, because you are living somewhere in outer space, not here on planet Earth. I don't know about any other planets, but that doesn't work here. Not on planet Earth. I have yet to do intergalactic travel. I'm waiting for Elon Musk or somebody to make that possible. But until then, I only know what the situation here is on planet Earth. This industry has a 92% failure rate, largely because people don't want to go through what it takes to become someone different first. They want to stay who they are and take who they are into the market and take money out of the market. It will never happen. My mother used to say, Oliver, never say never. Oh, never say never, Oliver. Well, I'm telling you, Mom, sorry, never. Let me say it again. Never. All right, guys. I know I'm silly, but it's a point worth. I'm telling you, it's a point worth belaboring. All right? 92% failure rate. Get it locked into your head. Most people know nothing about financial markets. They think they do. Oh, well, the market goes up and the market goes down, right, Oliver? That's it? Yeah, that's pretty. Most people know nothing about financial markets. That's a con. And here's another big one, guys. Success comes after experience, and experience takes time, years. You can't be an experienced trader in 2 days. You can't be an experienced trader in 2 weeks. You can't be an experienced trader in 2 months. Becoming experienced takes time. You can't cheat experience. All right? Anything good that happens before you are experienced is called luck, traders. Only what happens after experience can you claim as yours. Listen to me carefully. You can't become successful before you become experienced. Get this in your head, people. You cannot experience true, real success before you become experienced. True, real success comes after you become experienced. And what's required to become experienced? Time. This is what people do not want to put into this. They want a microwave. They want a microwave results. Can I have my gourmet meal in 15 seconds? No, you cannot. This is the number one reason why there are so many scams in this industry, because these scammers, right, which even I, believe it or not, have been accused of. Are you kidding me? Putting this truth in your face? How? But this is the number one reason that scammers in this industry get away with their scams, because they sell you on the idea that anyone can do this. They do not tell you that 92% of the people are going to fail. They do not tell you that this is difficult. They do not tell you that you're going to fail first until you become experienced. They do not tell you that experience takes time. They do not tell you that success happens after experience, and before your experience, you're going to be a loser. The reason why, how many people are in this room? There's 427 people in this room instead of 40,000 people in this room. Do you know why? Do you know why there's only 400 people here instead of 40,000 people? Because I tell you this truth. 92% of you are not going to make it. There's only 400 people here because I tell you that success comes after experience. There's only 400 people here because I tell you that experience takes time. There's only 400 people here because I tell you what's real in this industry. If I wanted 40,000 people in this room, I would constantly preach from every podium I can that everyone can do this, that you're all going to be successful, that it doesn't take time. Just follow these 3 things and get rich. I would have 40,000 people in this room. But I will never do that. You learn how to win in this business by first learning how to lose. Can I repeat that for you? You learn how to win by first learning how to lose. What does that mean, traders? You're going to lose first. What does that mean? You are going to become an expert loser before you see a single dollar, before you get winning trades consistently, before you call yourself a success, before you start to support yourself with this activity. You are going to be one of the greatest losing traders you have ever seen. You're going to become an expert at losing. You're going to become so intimate with losing, you're going to feel like this is just your natural state. You lose your way to success in this business. There is no way to win first, because winning doesn't come before your experience. Experience comes after you have lost tens of thousands of times. Guys, listen to me carefully. I get very, very emotional about this, and I apologize. It's just the way it is. This is just me. I get emotional about this because I need all of you to understand this. There is a direct link between how much you lose first and how successful you are later. And isn't it ironic that what all of you are trying to do is you're trying not to lose the very thing that you need to do. The very thing that you need to do now is to lose as much as you possibly can to get the losses out of the way now. You don't want the losses in the future. Just get the losses out of the way. Become so intimate with losing. Become so intimate with every possible error, every possible mistake. Know it like the back of your hand so that at some point the market can no longer fool you. The market can no longer trick you. The market can no longer surprise you. You've been there. You've done that. You know every possible mistake that can be made. You know every possible error, every booby trap, every dead end. The market loses its ability to punch you without you seeing the punch coming. How do you get to that state? You become an expert loser. Why is this a con? It's a con because most people don't have enough money to get through the losing period that happens first. First of all, they enter the game with this Mickey Mouse Disney idea that I'm supposed to win from day one. This is not Disney World. I'm sorry. This is not a Disney movie. This is real life. It is impossible for you to win until you become experienced. And it is impossible to become experienced until after you have become the #1 expert at what? Losing. How does a baby learn to walk? By running first? Wait, I'm going to learn to walk by sprinting first in the Olympics. Then I'll learn to walk later. No, a baby learns to walk by first trying to stand and falling. Standing, falling. Trying to stand, fall, 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 fall. Fall less. Fall less. Stable. Don't fall often. Take a step, fall. Take a step, fall. Take a step, fall. Take 2 steps, fall. Take 2 steps, fall. Take 3 steps. Falling, 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 falling until the baby becomes so intimate with falling and all the reasons for falling that he naturally starts to avoid the reasons, but not before becoming intimate with every possible way to fall.
Oh, did you pause the video?
I don't think he paused the video. I think
Oh, wow. Okay.
he's in
I
Colombia
was
and
talking.
shit is fucked up over there. The
Well,
internet.
can y'all hear me?
Now we
Mhm.
can.
Wow. Yeah, I paused the video, but I was talking. I was on mute. Wow.
Also, we need a younger person to run the class that knows about tech.
Yeah, I know. I was on a diatribe, but um, let me restart. What I was saying is, I know Oliver Velez has when he speaks, it sounds funny to some of us, right? And what he says has a little comic relief to it, but it's absolutely 100% true because nobody is an expert or is the best at anything when they first start doing it. To include Michael Jordan or whoever your favorite sports star is, whether it's soccer, volleyball, gymnastics, or whatever, right? They've all had to put in years and years of crazy hard work. We saw the documentary on Jordan, and he wasn't a good person. Like he was so committed to his craft that he was, self-centered. He was arrogant, egotistical, whatever you want to call it. All of those things. So, all of us as people, we tend to put ourselves on a pedestal. We think a little bit more of ourselves, and we all want to think that we're going to learn this faster than the average person. And that may be true. Maybe you are a fast learner and maybe you are going to learn this faster than the average person. But that's still not going to be as fast as you probably think, right? And even if you learn it very fast, if you learn it as fast as somebody like a Aiden, to me, he picked it up very fast. But, you know, things happen along your trading journey where you fall off track, right? You might do a little thing different, and that messes up your entire trading. So you have to kind of go back to what made you successful in the first place to get back on track. So that's why that experience piece is so important, and that's why you can go from classy to ashy just as fast as you go from ashy to classy. It's a two-way street. And just because you find success doesn't mean that you're going to be permanently successful if you don't continue to do the things that gave you that success, right? You have to continue to do your analysis. You have to continue to you know get on the charts at a specific time or whatever you do uh, that made you become successful. It's not something that you just shirk, at a later time once you started making the money, right? If you don't do your analysis, you're not going to see the move. If you don't wake up on time, you're not going to get in the move, in the proper time, and your trading is going to be thrown off. So all of these things, when you stack them together, are pretty rigid regimen, right? If you aren't used to having a schedule or doing things at a specific time, then you aren't going to do well, when it comes to trading. And as a newer person, you might kind of say, well, I don't want to do that. I'm not going to get up at 1 a.m. or I'm not getting up at 7:30 at the beginning of the New York session to look at my charts. Well, you don't have to do that. But when you start struggling, right, and it takes you a long time to figure it out, and it's because you're not going to the charts or you're not looking for your move at the right time, then that's why it might take you a little bit longer to understand what's going on. If you refuse to look at market structure videos, or you refuse to educate yourself on structure, right? Even if I try to teach the class, or Kim or Andrew or whomever tries to teach you what market structure is, if you don't take the time to educate yourself and spend your time uh, learning and understanding what market structure is, learning and understanding what a swing high or a swing low is, learning and understanding how your swing highs and swing lows change with the time frames that you're trading. If you don't take that time, then all of this is going to delay your growth as a trader. So if you want to find success and then maintain your success, it's going to take a little extra effort, but it is all worth the effort in the end, right? So I just want to encourage everybody to stay the course, right? If you fall off and you get skin up, trust me, we all have scars. We've all lost money, and we've all got wrecked or rinsed in trades that we thought were going to go our direction. You're not special in that regard. The thing that makes you special is you get back on the bike after you get rinsed or wrecked or whatever, right? After the trade goes directly against you, you get back on the bike, right? You control your emotions and you control yourself. And eventually you find success, right? We're not, the people who have found success, we're no different than you. We don't get up, upside down. We don't put our clothes on any different. We're not smarter. We're not aliens, man. Like it's just a matter of time for you. So be encouraged even when you lose, but also put in the work. Like, come put in the work. Don't be the person who wants the success without putting in any of the work. It doesn't work like that. Okay. So with that being said, let's talk some of these pairs. Hey, Andrew, you want to talk about GA?
Yeah, after when we're done.
What's that?
Yeah, we can do that later.
Okay. So this week, for those of you who trade like I trade, there are what should we be looking at? I don't want to say it. I want y'all to be able to say it. What candles closed?
GU.
The 2 week.
Come on, y'all. Yeah,
2 weeks.
the 2
1
week.
week. 2 weeks.
So you have an option, right? You can find order blocks on the 1 week, or you can find order blocks on the 2 week, right? Those are the options that you should go to immediately to look for your trade setup, because you're gonna be able to see your setups on those time frames, right? If you don't have a setup on those time frames and you trade like I do, then you shouldn't be trading it, right? And I'm not saying that on other time frames like the daily or the 4-hour, you're not going to have a trade setup. What I'm saying is, if you're starting with me or you're trading with me and you know how to analyze the order block, whether it's the weekly, the 2 weekly, or whatever, go down to the 4-hour, find your imbalance and trade that pair back to the order block, or wait for the pair to get to the imbalance in your order block and trade away from the order block. Either one of those setups are fine. But if you don't have a 2 week or a 1 week order block to start with, you probably don't have a good trade setup. Does everybody understand that?
Yeah.
That will keep you out of muddy water to start with. I'm not saying you won't lose any trades, but as a bare minimum, as a starting point, if you start with the weekly or 2 week, in this case, because we had the 2 week candle close this week, if you start with those candles, then you have a solid foundation to find your trade setups. Okay. That way you won't be, I guess, peddling pedaling in water that you don't need pedaling in, right? We won't be looking for trade setups that either don't exist or trade setups that aren't ready to be taken yet. And when I say aren't ready to be taken, I'm talking about aren't ready for us, right? For us to be to go through the trade. Does that make sense? Everybody tracking?
Todd, your audio keeps kind of going low, and I think I can't see anything if you're sharing your screen.
Yeah, I'm not sharing the screen. I'm just talking
Okay.
because I want to talk about this before we start looking at charts because you know we've had issues lately, you know. So I want to kind of talk through what we want to start with. Does that make sense?
Yeah.
Is everybody tracking? Because here in a minute somebody's going to ask me about like AF or something, and it's not going to have an order block on it. And I just don't want to talk about those pairs. You know what I'm saying? And I'm not saying that people can't trade the pairs. I'm talking about people that trade like I trade. You know, it's easier if you start with the basics, right? With the order block. If you start with the basics, which is the order block, then we all have the same reference point and we all have the same starting point, and we can all kind of analyze and come up with a common trading goal. Does that make sense?
Yes.
All righty.
Yes.
So I think Will wanted to talk about EU, GU. What did you say, Will?
EA.
EA?
Yeah, EAGU and EU. Yeah. I know
Okay.
EU was it had got to the zone for our 2-monthly order block, so I'm just trying to get your thoughts on that.
Are you still in a car?
Yeah, I'm still driving. That's why I prefaced it before I hopped on.
Okay. I'll pull up EGU. Okay. So EU. Let's look at it from the 2 week first. Okay, you can really use either one of these candles. But I personally like the 1 week candle better. But you can use either one. If you fib this candle, you can get the golden zone. I'm going to drop to the 1 week. Just because I like that candle better. I'm going to fib this candle from the bottom to the top. Now, if I understood you correctly yesterday, Will, I think you were saying trading it back to the zone. Is that right? Were you wanting to trade this back to the zone?
Yes.
All right, I'm gonna put this.
You're on the inside.
Man, this thing is not letting me adjust this. You dirty dog. It's not letting me adjust it perfectly to the zone. I'm just gonna put it right here. Horizontal ray at the 78. I can delete my fib. I'm gonna drop down to the 4-hour chart. All right, when I drop down, I see a low, and then I see an order block, and then I see relative equal lows at the 78. There's an imbalance just below the 78. Y'all see that? We all see the same thing. The imbalance is right here.
Yes, I see it.
Okay, so I would think that whenever it's sold, if you sold it back down, I would be pretty confident that you can sell it for about $1.65. Is that what you're talking about, Will? The only problem that I see with this trade is I need to see where it's going up first. So I need to see where we are traveling to first. And maybe we'll just go to these relative equal highs. Y'all see these relative equal highs here?
Yes. Yes.
Maybe we'll go to this high. Let me drop to the 1 hour because the 4 hour really didn't show me anything over there in that range. There's an order block there. I'm just gonna mark some reference points. There's an OB here, and then that OB has an imbalance on top of it. And then there's one. There's one here. Okay, so because we have this daily bullish order block on the daily, tells me we're gonna go north first. So maybe we go to this zone right here, which is about 70 pips or so, 79 to the middle of that zone, and then I want to look and see what price does, and if that's the case, then that's it's an easier trade to take back down to the zone. I don't anticipate prices selling and breaking this bullish daily order block and selling to our zone. I think it's going to go up first to the next area, which is there's a 1 hour order block that we have marked up, and then we got one way up there. But that's kind of how I'm looking at it. Do y'all see it any different? And the people who trade like me, you're probably not gonna see it much different. But maybe Kim or Andrew, maybe y'all have it marked up different. Kimmy, do you have a zone up here? Is Kim still with us? Can y'all hear me?
I went to lunch.
I did not. Sean.
You the work. I mean, what's going on?
I would have to really look at it because based on structure, it's in a supply zone. So I would have to really look at it. 1, 2, 3. Yeah. I can't.
Well, this daily bullish order block tell me we're going high. I maybe we can stop right below that zone I have marked up, but like maybe we have something right here that they can stop price. But from The only reason that you create an order block here is to break through this high. So this is what I
But that's
anticipate.
but it's in a daily bearish order block. So
Yeah, I
and
agree.
based on structure, market structure on the daily, it's back to a supply zone for a sell. So that bullish order block kind of doesn't mean anything to me unless it breaks that high.
Oh, it'll break it.
Bearish order
It'll mean something to you tomorrow on
block.
Sunday.
Well, no, it won't because I don't trade your USD.
Well, I think it probably goes higher too, because I believe there's a weekly bullish order block that's going to trump them daily ones, and also there's just Asian liquidity up about 70 to 100 pips up higher.
That's
So
that 70. That's that zone that I marked up. But
yeah,
we'll see. All I'm saying is, because of the order block, I mean, we ain't got to jump in the trade on Sunday, but because of the order block, I would anticipate going higher before it turned to burn. And on the Asian session, like Kim said, it could sell down into that daily order block and buy up. I kind of expect that to happen too. But I don't expect it selling down to our zone, for the weekly order block zone, right off the bat. That's all I'm saying. I think GU is similar, but GU has a beanstalk candle on that bad boy. I don't know what's going on with y'all over there in London, but why is the pound so strong? Why is it so strong?
it's not. I don't think it's really a pound.
It's stronger than that dollar. Remember me and you had a conversation. You was telling me how trash the Australian dollar was.
Right. Well, I mean, it is stronger, but the U.S. dollar, when Trump and them came in, what Scott Bessent said was he wanted a weaker dollar.
Well, that's what Trump been saying that.
Right. So that's what you're seeing.
So you trash the currency.
We've been saying for a long time that from a fundamental macro standpoint, it is time for the dollar to weaken. We just have been front running it and been wrong. The dollar is weakening because it needs to. That's why I've always been skeptical about all that BRICS shit. Weak dollar means economic expansion, so it's time for it to.
I know, but that's why your boy Trump is mad at
Yes, that is why. So I guess the point I'm making is I don't think probably they're doing anything special, in the UK, that it's time for the dollar from a cyclical standpoint to get weaker. And they have done things to weaken it.
with that.
I believe that because sometime last year the dollar was just getting stronger, right? And it wasn't even correlating with the other USD pairs or something. Like for example, gold kept going higher, but the rest of the pair, like EU, GU, was just selling. So, but right now, everything start to make sense. The dollar pairs are just correlating very well now.
Yeah, gold went higher because of all that tariff talk. And if you're not going to have American exceptionalism, then where's all that money going? It's going to go into gold and probably to a lesser degree or maybe a greater degree, depending, it's going to go into Bitcoin.
So tell you don't think we're gonna have American exceptionalism?
Well, I mean, we probably will. I mean,
yeah, we will. I know the talk. Talk
right.
is cute.
What I'm saying though is when a guy tells the world, when the world order for the last, I don't know, 80 years or whatever it's been, 50 years, when the world order has been, I'm going to export my dollars to the world and the world is going to export their cheap shit to me, and my people can buy cheap shit, and in return, the world has dollars. And what the world does with those dollars is they turn around and they buy your bond market and they buy your stock market. So your stock market always goes up. Your bond market, your yields stay down because everybody's buying your bonds. Your people can go out and get mortgages and cars, and you have American exceptionalism, and you have rich Americans living great lives. It's why we have a credit system and a lot of places in the world don't, because the world has bought our bond market, making all that shit possible. So when Trump shows up and says basically, I don't want your cheap shit and I'm not giving you dollars, then logic would suggest that the markets, they might still go up, but maybe they don't go up as high. So those bonds spike, because everybody's not buying it. And maybe some people are like, well, fuck you, I'm pulling my shit out. I'm gonna reinvest my shit, domestically, in my own bond market, in my own stock market, or wherever, or in Bitcoin. So I don't know what that looks like longer term, but I'm not going to say that the markets don't go up, but maybe they don't go up as hard, and as fast as they have in the past. I don't know.
Natal, as always, we appreciate the way you eloquently put that.
How you learn,
All right, but I would think that GU is going to go a little higher as well. First, there's no wick on that candle. There's a zone up here. Man, if I can get to it. Okay, so as you can see, there's another order block up there, bearish order block that we're fast approaching. So I think we got about 50 pips on GA or GU to buy up, and I would anticipate that the price is going to reject that zone, and then we can get the sell down. I like this setup because there's no wick there. This candle hasn't started the retracement process yet. So if you're interested in selling this retracement,
yes, sir. We want to sell that.
Yeah, you'll have a good opportunity to catch all of it. You'll be able to see the change of character. Maybe you wait for on the 1 hour. Some of y'all might need to wait on the 4 hour. I don't know, but you can catch all of that pullback, right? And not only can you catch the pullback, you can sell it to buy it if you want to treat it like that. So I like the GU setup a little better than the EU setup because it hasn't
watch out.
It haven't started. All right, you guys have any questions on that? For the new people, do you understand what we're looking at?
Yeah, for the most part.
Okay. All right. What other pair did you want to look at? EA?
Yeah,
EA?
that was the one. EA.
Nope. Why you want to look at this pair? Oh, Will?
Because it got back into our original zone from the 2 months. I just wanted your opinion on it.
You said it got back into what?
Our zone from the 2 month order block.
Oh, shot the sheriff. Did not shoot. Do you think it's buying, or you think it's selling?
I don't know. That's why I'm saying it's in our zone area. I just wanted your opinion on it. because I'm not used to that happening yet. 2 months now we're getting to our zone that we marked up from the
Oh,
2 month.
well,
So
on my
I just wanted your opinion.
just from eyeballing this, I don't think this is in the zone. Let me see.
It hit a zone though.
Okay, because this has a lot of wick. Okay, I see what you're saying. Yeah. Okay. I personally think that that this is selling if I'm not mistaken. Let me look. Let me run. I got to run this down because this is not one that I looked at. But just looking at that from what I'm seeing, okay, this has a daily bearish order block. Yeah, I think it's gonna sell. When is that candle closing? Four-day. All right, this is suggesting that we're going higher first. I would look for it to probably come to this zone, and then I think it's going to sell after that. Let me look. Let me look on the 1 hour and see what's down here. All right, you see the imbalance right there? You see this imbalance, Will? Can y'all hear me?
I think he just left.
Yeah.
Goes
Okay.
out saving lives or kissing babies or whatever it is.
So there's an imbalance here, and it's probably going to bounce and go up. But I think it's going to sell from that zone up the top right here. Now, I just want to make clear that if you're trading in my group, this is not a trade that I would even entertain, because there are better setups. There are easier setups for you to take. But if you catch this buy from here, that's plenty of pips. But I would stick to the thicker OBs. Now, in Will's defense, this has an ugly bullish order block on that weekly chart. But yeah, I think these EN and EA and GN and GA are going to eventually start pushing down. I think there are a lot of imbalance in that area below that got to get in this area right here. But we had a period, I want to say last month, where we just ran kept running higher. Y'all remember these 3-week order blocks?
Yes.
Yeah. So I think price is working its way back to this original imbalance right here, and then I think we're gonna buy once price is in here. But I think it has to work its way back down to this to touch this imbalance. It's just not. It's a jagged ride because we put in 2 back-to-back order blocks. I'm not saying you can't get paid trading this pair, but it's going to be more tricky than your straight shot, your pairs with the straight shot order blocks.
Oh no, I agree. Like I said, I just wanted your opinion on this. They got down to that zone. That usually hadn't happened yet after you closed the 2 months. It happened kind of early, so I was going to get your thoughts on it. I wasn't like trying to trade that actively because I didn't know what to do. I just wanted to look at it.
Yeah, I mean, it got a nice rejection, and I would be super confident in that buy up. After that, I would kind of have to take the wait and see approach. All right.
That's cool. That's all I got. Anybody next? I appreciate it. But
Hey, Ty, you mind looking at EJ?
Who's asking?
LeVar.
Oh, yes, sir. Hey, LeVar, are you on a computer?
No, I'm on my phone right now.
Okay. All right. I'll look these up. But for me to have the markup, I know you know what you're doing, LeVar, but for me to mark this up on my charts is cool. But it's better if y'all have these marked up on y'all's charts. And I think all of these JPYs are ready for the cook-off. If y'all are invited to the family cook-off because it's about to happen. I like this trade setup, and I like UJ too. GJ's is a little bit more raggedy, but it is what it is. It has the 2-week bearish order block, but I want to talk about the 1 week because it has that little gap in the body. Y'all see that little gap?
Yeah.
Okay. We kind of talked about this before, but this 2-week candle allows us to kind of see it. So on the 1 week, there's a gap, and we can see that price went back up and filled in this gap. But this was a lower time frame move, so it moved up pretty fast, and then it sold off. So whenever I see a gap or candles, that have that gap, I'm always expecting for price to buy back up, right, to close the gap. If you look at all these gaps when EJ was selling down, right, we had this gap right here. This next candle still bought it, and it eventually sold, right? But I would look for these gaps, right? When you have these gaps, for them to get filled again. In this case, we see if we go to the 2-week candle, right? Sometimes you're not going to have the benefit of having a higher candle, or you're not going to remember the higher candle, and you're going to have to kind of do this in your head. But the 2-week puts those two candles together, so you're going to automatically retrade that gap. So if you fib this 2-week candle, you can see your zone is right there, and I can move my 78 up a little bit. I'm going to delete this Fibonacci. I can go down to the 4-hour chart, and I can look for imbalance in my zone. So in this particular case, I don't really see the imbalance in my zone. I see relative equal highs right here. I see imbalance right above my my golden zone. So this is probably the area that I would target, right? If I'm buying this up, I would buy it up to that area, and then I would sell it away from that area. So as a trader, you don't have to buy this up. You don't have to participate in this buy. This is called a counter trend trade, right? So maybe you're not comfortable with your analysis, or you don't, you just want to kind of watch and see it take place. But this buy up, if you catch it from right now, it's 190 pips. That's a great trade. Or you can just wait for price to get here and give you a change of character where you can sell it down. Just because we have new people here, right? Let me kind of explain something that you might want to pay attention to. So if we follow this price leg down, there's a low, there's a pullback. It's just a complex pullback. I know it's ugly, but there's an impulse move down, there's a pullback. There's an impulse move down, there's a pullback. There's an impulse move down. There's no highs that are being broken, right? So eventually, and it's probably going to happen down here, where price pushes up, pulls back, and then we're going to go up and break a high, right? If we're just looking at price on this 4-hour chart, right? Maybe we want to see a move like this. Price breaks this high. That's called a change of character. Then it's going to pull back. It's probably going to pull back 78%, maybe 62%. And then you get in the trade. Then price goes to your TP. Does that make sense? You have to see a change of character, which means price needs to go up and break a high first. Then it needs to pull back to let you in. That's when you take your trade to the TP. Does that make sense?
Yes.
So when I'm here on this call and I'm saying, hey man, price is going to do X, Y, and Z. If price doesn't break a high or break a low going in the direction that I was saying that it's going to happen, then that's not going to happen, right? So just because I say it on the call, it doesn't mean we blindly trade in that direction. When I say what price is going to do on the call, I'm not getting in the trade myself until I see something like this happen. Until I see a high broke, a pullback, then I get in, right? Now, I don't necessarily wait to see that happen on this 4-hour chart, right? So, and neither does a lot of other people. They might be on a lower time frame on the 1-hour chart, right? Or on the 15-minute chart for some people, depending on what time frame they're trading. And they want to see that happen on those lower time frames. So please understand that the people who are taking these trades are taking it based on the time frame that their trade setup is showing itself, and when they get their entry signal, right, on a lower time frame. Okay, and if that doesn't make sense to you, then we'll just have to wait for a Friday session on the beginner trader, where we can talk about that in greater detail. Okay, is everybody tracking?
Yes, sir.
Okay, so on this EJ trade, I do like EJ. I like about 190 pip buy up from where price is right now. And maybe when the market opens, it sells first, which would be even better, right? So let's talk about that too, because I think this is a great time for us to discuss this. Okay, this is a bearish order block. All right, prices retraced or it pulled back quite a bit. Ideally, we would mark our low of this candle, right? And in this particular case, guys, I can't stress this enough. We've had quite a bit of pullback, so this pair may not go down here and break this low before it buys back up. So ideally, you want to wait for a pair to go break the low to buy back up. And this is why I always say I prefer to trade a pair that has a full candle. If you look at this candle, in fact, we're going to do it. We're going to look at this candle and we're going to go back to that GU trade, right? Because at the end of the day, if I'm not calling the trade for you and you're going out here and you're looking for your own trade setups, I want you to be able to see this type of stuff. So the difference between that bearish order block and this bullish order block on GU is there's no retracement that started. So what that means for us as traders is if we mark this high and we're waiting for our trade to set up on Sunday or on Monday, if price tomorrow, right? If price takes off tomorrow and buys up, we can't lose. If price buys up, all we're waiting to see is a change of character up here, right? Maybe it doesn't break our low, but maybe it breaks a low up here. It pulls back and then allows us to get into the trade. And we're getting into that trade above the candle. And then we take this sell down to our zone. This is to me, a grade A trade setup, right? These are the types of trade setups that I personally like the best, because everything that I would have on a block to check off is going to happen with this candle. You know, when I watch my ICT videos, he's always talking about price going above the old high or the midnight high at the last candle. If you're biased for a sell on a daily chart, you want price to be above the old daily high. This is all the same information. It's just a different time frame that we're looking at it on. So if price is above this 2-week candle and you're bearish, right? We are bearish because we want price to sell down into that zone. So we want to catch our sell trade above the high of this 2-week candle. That would be a grade A trade setup, right? These are the trade setups that I really like looking for. Now, the EA setup, the EJ setup is a good setup, but it's not a grade A trade setup unless it goes below the low right there. Y'all see the difference?
For shizzle.
Yes.
Yes.
So this would have to drop like 90 to 100 pips to get below this low and give us a great trading opportunity. Now, I'm not saying you can't take a trade, guys, but what I'm saying is there are some setups that are better than the others. You know, but you have to kind of understand what you're looking for as a trader. And you know, I talked to some of y'all individually about some of these setups. So I want to go through and just kind of look at some of these setups. I'm just going to look at gold. I know we don't generally talk about gold in our sessions. You know, as far as what's that?
Before you move on, let me jump in just to add a sentence or two about that GU sell, that potential GU sell. The other thing, basically, guys, that's gonna be a stop run if it materializes. So if you can catch that sell above that candle and it's that 2-week candle, you're probably gonna have a big ass, you know, pip count, a big sell, because you're getting a stop run. It's a stop run opportunity is basically what I'm saying. So anyway, go ahead.
Okay. If we look at gold on the 1 week, let's look at gold. You won't go. Okay. So if you look at this candle, right? And I'm just going to take it back, you know, a little bit. Let me see. Okay, if you look at this bullish, these last 2 candles made a bullish order block, right? So we expect gold to go higher. We want to see gold trade back into our zone, and then we want to see it push higher, right? That's in a nutshell what we would look for gold traders. Now, ideally, we want this new candle to open up
Trade higher.
trade higher than this high right here, right? If it trades higher, you are winning, like you have the advantage. Again, once it gets up here, you want it to pull back, like break a low on a lower time frame. Then you want it to pull back to let you in that trade, and then you'll take that trade down to that zone. Does that make sense?
Remember, I was talking about the 50% of this week. I know
The other wick over here?
Yes, this one.
Okay.
Yeah, that
Yeah,
one.
yeah.
We were talking about gold is going to create all-time high again. We
Right.
just want this like last week to close like this. Exactly. It might reject from the 50% of this week, then trade back down and continue going higher.
I agree 1,000%. So 50% of this wick, then trade down to the zone, then go to a new high. And I don't disagree with that at all. Now, you just have to, as a trader, you have to go and you have to do the work, and you have to mark your chart up with your zones, right? And for me personally, it doesn't matter if it trades to 50% of that wick or not. For me, I just wait to see a change of character. Does that make sense? Once I see a change of character, I'm not measuring to see how far the trade went up. I'm looking for the sell back down to the zone. Right? So you guys have to come up with a system that you can monitor and that you can follow all the time. This is where that discipline comes in, right? If you're looking at charts with Newell, he's always going to be on the 30-minute chart. It's his system. He don't need to change and do what I'm doing, or change and do what Andrew is doing, or Kim. He's going to trade his system. It works, right? So that's where the discipline comes in. You have to kind of develop your system around what you're doing, and then you have to stick with that system, right? I'm going to come and I'm going to analyze the charts the same way I analyze the charts every weekend. All of you, it doesn't mean that all of you have to see the charts the same way that I see them or analyze them the same way that I do, but you have to do your analysis and mark up your charts the same way you do every weekend. And then you look for the move to happen the next week based off of your markups. It's not going to help you guys if I'm the only one marking up charts, right? If I come in here on the weekend and I mark all of my charts and you're asking me questions, hey, well, Ty, what do you think about this pair? Hey, what do you think about the US 30? I can mark it up. And then guess what's going to happen? Sunday when the market opens, or Monday, the market is going to start moving. You have no markings on your chart. I have all the markings on my chart. It's not helping you. So when we come into these Saturday meetings and you're asking questions about pair, what I really would like is for you to pull up your screen and your chart, and then we can talk about the pair and you can make the markings on your chart. Because I'm sorry, what'd you say, Andrew?
I say 100%. That is how it should be.
Exactly. So, me marking up my chart with information that you wanted is not helping you at all. I can set the alerts on my chart. I can do whatever I want to do on my chart, but it's not helping you at all. I just want y'all to understand what you're doing to yourselves week in and week out.
If you are scared that your analysis may be wrong or something,
mine is wrong.
You are not helping yourself.
Exactly. Every markup that I do, there none of them are right every week, right? And doing analysis isn't so you're right, right? The market is going to go up, down, or sideways. And if you think it's going down first, but it goes up first, it doesn't mean it's not going to come back down and hit your spot. Maybe you had the direction wrong at the initial move in the market. Your markings on your chart will still be valid. It's still an imbalance is still an imbalance. Maybe it's just not going to be filled in the order that you think it's going to be filled.
Bro, this is simple. Whether you are right or wrong, the most important thing is as soon as you see the way you trade presented itself, that is your opportunity. Gold, okay, like I said, I was going to talk about GA or something, right?
Yeah.
You wanted GA to sell last week, right? It doesn't mean it's not going to sell, but it didn't sell last week rather than bought up, right? Gold was the only clean opportunity I had last week. I took advantage of gold. I forgot about GA and GU because what I was expecting from GA didn't work. Does it mean like I'm not going to make money in the market or I was right or wrong? That is how trading is. You can say, yeah, this thing is going to go up or down or something. You take a position, it stop you out or maybe break even or you don't even take a position on that trade. But at the end of it all, did you see what you see before you took the trade?
Yeah, and just an FYI, I marked all my charts up already. I put them in the chat just so you know. I ain't actually looking at marked up already.
Yeah, I feel you. Listen, I'm talking to the group, and I get it. A lot of people have found success recently, which is awesome, right? But the group is big, and some people don't even show up to this meeting. They might hear this on playback. The important piece, all I'm saying, it's not like I'm not gonna mark up the chart if somebody needs me to do it. That's not what I'm saying. What I'm saying is because you're asking me to mark up a chart, and not necessarily you will, but you when I say you, I'm talking about somebody in the group is saying, hey, can you look at this or can you mark this up or whatever? I'm doing it, and it's making me better. Because I'm getting all the practice. I'm getting to go and look, oh man, this has an imbalance here. Like this setup is pretty clean. This is a 290 pip trade. I get the repetition of doing all the work. And sometimes I won't even look at a pair and then somebody will mention a pair and I can put an alert on my chart. And then at some point during the week, that alert will go off. And the trade setup is there for me because it's on my chart that I marked up with your help on the weekend. That's all I'm saying. And I know that when I was first learning how to trade, I would have paid people for signals. Like if we had just knew the direction of the market, I was like, man, I can make money if I know the direction. I'm confident in getting in. I don't need to have a perfect entry because I can just hold the trade if I know the direction. All I'm saying is in this group, we have an opportunity for you to have all of those markings on your charts, right? You can make whatever notes you need to do on your charts. So I just feel like not enough people take advantage of that on a Saturday. You show up to the call, you do everything right, you listen, you pay attention, but you don't make the markings on your chart. And then when the market starts, it's totally different. It's just like anything else. If you play pickup basketball, right, you might be able to shoot your little set jumpers or shoot free throws. And then as soon as they have referees and the whistle blows and you got to run and chase somebody, your basketball skills are lacking. Like you suck. It's because you don't have the proper repetition. Like you don't practice the same way that the game is. You got to have the markings on your chart. I just stand by that.
Can I share my screen at some point? I'd like to show you what I have so far.
Oh, how you doing, young lady? You can share your screen now.
Okay. Hi, everybody.
Good day.
Hola, ¿cómo estás?
Hola, ¿cómo está? Estoy bien. ¿Cómo se
Oh,
llama?
Wow, she could really talk.
Is that, is that,
yeah,
is that,
I didn't know that. I mean,
that nice?
She was
Sí,
talking about
claro
that the
que
other day.
sí. I'm sorry, I'm trying to. Okay, so I'm gonna start with US 30, and I'm trying to. Well, I'm trying to incorporate, what you talked to me about with the fib, and
Let me see it. Let me see it.
I did. I mean, of course, I got some lower time setups, but I was just like I was telling you the other day, just trying to
Like,
incorporate some of the other things that you were talking about too.
are you guys able to see the screen share or no? So I can.
No, I am. I'm just trying to
Oh, okay.
start with 30 because I was on Nas, but I have more detail on my
Mírame,
30 chart.
mírame. Muéstrame.
Okay, claro. I see you practicing. All right. So can you see my chart now? We're gonna start with the daily because I know you were talking about, higher time frames and stuff. I hope you guys can understand what I got going on
But
here.
like, can you humor me and start with the weekly? Well,
Yes, sir.
listen.
I
I,
tried.
I'm only saying this because the part about the price going below the old price before it buys up.
Yeah, but price hasn't opened yet, so I couldn't determine that
Well,
for
I
Sunday.
know, but I'm just saying I want to see. I want to see if you are paying attention to your weekly low.
Yes, so that was something that I thought about, but I was like, well, I can't determine that because I do have the previous day low right here, which is also
But
that's
what about the previous week low?
oops. So it's right here. This was Friday's low, and this is also the weekly low
Okay,
because
it's
I had
weekly.
that marked
Okay,
up for
then that's
I had
cool.
that
That's
marked
cool.
up for a lower time frame,
Okay,
right?
that's cool. Mm-hmm.
So two things could happen, right? Well, it depends on what time frame I'm looking at. So I don't know if, like you was telling me, if the candle closes below, then it means we're going to buy, and then vice versa, right? So I can't tell because of how US 30 moves, and because I'm used to trading lower time frames, but I'm kind of trying to get better. Um, I I just have some areas of interest that I have marked up, but I don't really know what price is getting ready to do until Sunday. But maybe you could give me some more insight. I could show you the areas that I have marked up, but like I could show you the 30-minute.
Well, I don't want to. No, I don't want to steal your thunder. Start wherever you want to start. If you wanted to start with the daily, I mean, that's cool.
No, you told me to start with the weekly, so
Yeah, I just
but
wanted
I
to see you.
can't.
I see you have it marked up. That's cool. So what I would do is fib that weekly candle because it's a bearish OB. I would fib that whole red candle and I would mark up the
I
50.
think I did do that. I think I did.
I
Let
think
me
you
see.
did do,
Hold on.
but
I did, but I like Will shared with me the levels, but then
I
I was
get it.
looking at your levels, and then it was not the same levels, and then
But
Will had a
just
different level.
well, throw the fib on this red candle. Let me just see what it looked like.
I think I did that. I think I did because I have the gold. Yeah, I did. I did do it.
Okay,
See?
let me
But I'll
just see.
put the fib on there.
Naima, you're so como
I'm
se
what?
dice feisty.
What? I'm not even being rude.
No, not rude. Feisty.
How? Okay, so I got the 61.8. Yeah, I did it. That was the first thing I did, actually.
Where's the
I
50?
started, sir.
I can't. Where's the 50? Which one? Okay, that's the 50.
Oh, I
Okay.
didn't mark the 50, but there is BSL on lower time frames. So I was
What is
looking at
BSL?
price buy side liquidity.
Okay, buy side liquidity.
Yeah. So there's BSL right above the 50%. I didn't mark the 50%, which I can put something right there for the premium. I mean,
Well,
the
no,
discount, but I had
I
the
don't
golden
want you to,
zone.
don't add a bunch of stuff out because you already told me you don't like a bunch of stuff on your chart. I'm
Okay.
just, for me, now drop to the 4 hour for me, please. I
Okay.
just
So
want
is
to
this
see.
okay? This is what I had. I had the golden zone,
Mhm,
and then I had the one. So this daily, right?
mhm.
This is the 61.8, which is the golden zone. But there's also a 1 hour. So the discount is there's a daily, there's a discount, and then there's a 1 hour breaker block.
Well,
So
but here's where I would disagree.
okay.
How is that the golden? Is that the that's not
Well, hold on,
No,
Sean.
no,
Hold
no.
on,
That's a
Sean,
different.
hold on.
That's a different time frame. That's not this. Hold on.
Yeah, that's what I'm saying.
That's a different time frame. So what I usually do when I mark up is I'll put what the confluences are on the side, and I'm gonna check each time frame for different confluences, and then I add it. Does that make
And
sense?
Naima, but just from our conversation, to me,
Yeah.
your premium, because this is a sell trade, like that's a red candle. So you want price to come back up to the premium before you sell it, right? So to me, your premium it starts at that 50%. So what if there's an imbalance at that 50% and price just taps into the premium and starts selling? Are you going to be prepared for that? You have the 61 marked up as your golden zone. Really, the golden zone starts at the 50. And maybe there's a imbalance there and prices in the premium, and it's going to just sell from that imbalance. I don't know any of this. I'm just speaking from what I see. And maybe if you drop to the 4 hour chart, we can look and see if there's an imbalance before it gets to the 61.
Okay, yes, sir. I don't know why I can't see it. Okay, well, just have to remember that this. Oh, there it is. Okay, so you said go to the 4 hour. Yeah. So
See that there's a
I'm gonna
big
take this.
well, that's a big imbalance right there. That price could just go up above that little wick right there before it gets to your 62. You see it? Because you see where, yeah, exactly.
Yes, sir.
So what if price just tapped in there and started selling? Like, price doesn't necessarily have to go 50% or it doesn't have to close totally. It could just tap in there and start selling. And that's the same thing.
I usually focus on the 50%, but then you was like the golden zone was better. So then I was like, well,
no. I think you're saying the 50% of an imbalance. I'm not. The golden zone is only is a different thing. The golden zone is a pullback of a candle. The golden zone is the area I look for my imbalances, right? And I know we when I say golden zone, most people think I'm thinking 50 to the 61.8, but really it's 50 to the 78% because price could go to the 78% and give you your optimal trading entry.
Mm-hmm.
Does that make sense?
So I really just, I mean, use the fib as a confluence, but I need to just
that's fine. Listen, I think if I'm being honest, you don't have a problem finding trades. You do very well with that. We already know. We talked about this yesterday. So just use the fib. If I were you, I would just use the fib as a confluence. You don't need to add something that's going to confuse you. All I'm telling you is take your profits. You know what I'm saying?
Yes, sir.
But in this case, I would make sure I monitor that zone right there. Because the US 30 could just come tap into that zone and just start selling.
I mean, I believe eventually it's going to take this BSL that's up here.
Well, yeah, I believe that too, because your BSL is below that imbalance. It's going to buy up past your BSL into that imbalance.
Right. So I can see price. The only thing I was concerned about, right, was because sometimes 30 will do something like this because it'll make its own rules. Because there's a lot of trend line liquidity above here, I was like, there's a possibility that price could blow past this and go and take this. So that's why I kind of like a little cautious about
Well,
this area, even though I
but to
hadn't.
me, and I don't know, Leandra might be able to have a more intelligent conversation with you about stuff like that. If I'm taking a US 30 trade, I'm only taking it like to that imbalance, or I'm only selling it from those levels. So if it goes higher than that, I'm not even going to be in the trade. So if it buys up and it goes higher than I expected, I probably won't pay that much attention. But the weekly bearish order block is an indicator for me that price is going to sell. So if I was going to buy it up,
Can
it
you go
would.
back to, I'm sorry, Todd. Can you go back to the time frame you was just on?
I think it was this. You talking about this one?
Yeah, that was it.
Yeah. So based off market structure,
Mm-hmm.
right? This is your break of structure. So
Right.
so this is your swing high, and this is your swing low. So price can come anywhere between those zones, which I would be looking for price to pull back to here, to this supply zone. And this is just how I trade, right? And then look to sell that down based strictly off of market structure.
No, and I agree. And I was looking at this spot too because it's the closing block from Friday, right? Wait, sorry, Thursday, right? And it's above the Asia range. But I wasn't sure. I'm glad you pointed that out because I was kind of like, I don't know, because I was like, well, this is the golden zone up here, and
No,
this
but
is that.
that's why I told you to bring your 50. The 50 is the zone. Like you're saying the 61. It's the 50.
Correct.
You see how that 50? See how the 50 puts you right in
It
there?
lines up, yeah.
Yeah.
So then this, okay, so the 61.8 is not. I guess I'm just trying to
It's a
understand.
level.
And
Listen, it's a pullback level, right? So price can pull back to the 50 and start selling. I told you that it can hit premium and just start selling. It could go a little bit higher. I told you there's more trades that go to the 50 and then continue than there are the ones that pull back to the 78 and continue. The reason ICT mentions the 78 is that's the optimal trading entry. He's saying those are the best trades, the best entries to get into the trades. Now, there are some trades that go 88%, but if you're waiting for a trade to pull back 78% before you get in for the continuation move, you're going to have very few trades. You're going to have probably a higher win ratio, but you're not going to have very many opportunities because some trades are going to pull back to the 50 and just keep going. Others are going to pull back to the 61 and keep going.
Mm-hmm.
Does that make sense?
kind of. I'm trying to track where you're going. I am.
Well, listen,
This Fed is new for me.
right, but I don't want you to confuse your trading because of a tool. A fib is a tool. It's not a guide. It shouldn't change the way you're looking at the market. You see the market just fine. We've talked about this. You can see the market. You trade ICT. The fib you can use for confluence, but I want you were asking about the levels. So what I'm telling you is the 50% is your either discount or your premium, depending on whether you're looking at a bearish market or a bullish market.
Okay, so that's my question. So how do I know which one is which? Like which one is the 50? Which one is premium? Like if it's bullish, is it premium? If it's bearish,
so think about like
above
this.
and below.
Yes. If you're buying, you want to buy at a discount, just like you buy your shoes or your necklace or your clothes. You don't want to pay 100% price. If your favorite store is having a 50% off sale, Naeem is going to show up. That's the same thing. That's the same thing that is on the charts. What, Sean?
Why don't you pull up a bearish or bullish candle and slap that fib on it and show her,
because she could. Okay, go back to the
right,
recent
but she's
chart.
asking what's the premium, and
That's
what's
not. I'm gonna show you.
No,
to,
I know what a okay, so what I'm saying is he was like, depending on the direction of the candle, right? If it's bullish or bearish, that the 50% could act like the premium or it could act like the discount. So I wanted to know, well, which one was which for whatever,
so
if
for
it's bullish or bearish. That's
for a bearish candle, 50% is the premium. For a bearish candle, 50% is the premium.
want to be above the 50 if it's a
Above the
bearish candle.
50%
Think
is
it's
the
selling, you
premium.
want price to pull back above the 50.
Okay.
Think it's buying, you want it to go below the 50 to be the discount.
Yeah, a bullish candle of 50% is the discount. Anything below the 50 on the bullish is a discount. Anything above the 50 on the bearish is premium. Does that make sense?
So above, I gotta write it down.
Yeah,
Above the, dang, say the last part one. I'm sorry.
Odd.
Can you say it again?
Hello?
It
Hello?
just depends on your market, right?
Mm.
That's what they are saying. If the market
No,
is bullish, then the 50% is the discount, which is right. Then below the 50% is the, discount area anyway, because the 50% is just like the what is it called? Ah, I don't even know what I need to call it.
Equilibrium.
Equilibrium, right?
Yes.
So anything below the 50%, you are already on the discount.
Y'all are making it
If the
so
market is bullish.
y'all are making it so difficult.
How is it difficult, Kim? I mean, please simplify it.
Because it's I'm gonna go on mute. I'm gonna go on mute.
Just simplify it. I mean,
Kim, explain, because you explain things well. Explain,
yeah,
Kim.
please explain it, Kim, please.
I don't ever use discount or premium. Like I don't ever use that language.
He's using
but
that
listen,
language.
y'all are. She asked a question because
No, and I get it. No,
she understands. She understands.
but she
premium.
asked the question because she's hearing it from somebody.
She heard it from ICT, Kim.
Oh, that's
I mean,
that explains a lot.
We wasn't talking about premiums and shit. I mean,
I know,
anyway.
that's what I'm saying.
But do you use fib, Kim?
So I do use the fib.
How do you label your sequence on the fib?
How do I level
the sequences? Because they are just level, right? So what is the 50% on the fib for you?
What is the 50% on the fib for me?
Yeah.
What does it mean? What does it mean to you?
It means nothing to me.
Because I have a question. I'm sorry. I have a question.
Yes.
Okay, so this happened actually. This was a real thing that happened on, I think this was Friday this was Friday, right? So I saw this inbound, okay? And the way that I usually mark it up, and Todd is working with me about marking up my imbalances correctly, but it ended up it hit the 50%, right? You guys can see that on my chart. But really, it sold from it hit 50%, but it really started to move from the 78.6. So that was another reason why I was like, man, maybe 78.6 is something I need to pay more attention to, because normally I actually got in the trade here, price went 1,000 pips, right? But it didn't sell like how I'd wanted it to sell until it got up here. So that's why because you guys are more familiar with using the Fibonacci and it is a tool of confluence for me, I was like, I just want to be able to make sure that I'm using it correctly. And I know that Todd and Will had went over my numbers, but I was looking at Todd's numbers and I was like, my numbers don't look like Todd's numbers or Will's numbers. So I was like, because less for me is better. So I don't even know if like these are all the right ones. And then I know that I was looking
yesterday
at
I told you
some videos.
You don't need to have for you, you don't have to have those first two numbers. The 38, the 23, they don't need to be on your fib.
For me, I don't even need them.
And I don't need them either, but I'm trying to look and see what do you have marked up. Like, how did you fib that whatever move you just fibbed? 'Cause
Hey,
Yeah, I've got a question.
hey, y'all, don't do it.
okay.
Don't do it. It
No,
was a 30. She fibbed a 30-minute candle. You can't see it. Don't do it. I don't want y'all confusing her.
Okay.
It's she fibbed a 30-minute candle on a move, right? Not the whole move. I know y'all are looking like, man, she didn't fib the whole move. So she doesn't even need the fib, y'all. Like,
she don't need the fib. I totally agree.
She's a very successful trade. She can see the trade setups without the fib. The fib was confluence, basically. But I can see this is going to become a problem.
I wasn't trying to make it a
And
problem.
if
I'm
it's
just
giving
No.
her headache,
Listen, Naima, I'm talking about.
It's going to be a problem.
I don't
I'm
think
talk-
she needs the fib. So
I'm talking about for you, Naima. Like, I don't want you to get confused at what you're looking at because of this fib. When you already you can catch the moves. You're like Leandra. Like, y'all have a system, a process, right? So
but I'm always learning. I'm always seeking to, get better. And especially when we were talking about the higher time frames, right? And being able to look at it from that, vantage point, like
okay, but you're on the lower time frame. And all I do on the higher time frame, I mean, you saw how fast I use the fib when I look at these weekly candles. I'm not on here trying to make a science out of it. I fib the candle one time. I mark up two things. I put a box at around the 50, 61 and a horizontal rate to 78, and that's it. I drop down to find my imbalances after that. So us having all this conversation around this fib, and we're not even on the weekly level, to me is problematic. Right? So when we did put the fib on this weekly chart, right at that 50%, it's the same zone that you looked at. That should be all there is to it. It shouldn't have to be a drawn out discussion after that. You understand what I'm saying?
Yes, sir.
Like, you already have you had the BSL marked up, so you already have the general area you're looking at. So all I'm trying to say is, hey man, like, if you're trying to add this tool and it's a huge problem, like, we can add it later, or maybe you just have to continue to do what you're doing because you're doing well.
So I even have a question regarding these her markings, right?
Uh-huh.
So the 50% and all of these other lines that she marked out, where did she feed? Is it from the weekly, the daily, or what?
So, look, can I say something real quick? And maybe this one might bring a little bit more clarity. Me personally, I have an issue, right? Which is it's greed and just being satisfied.
Wait,
But I have issues with.
Can you say that? Wait, hold on now. Say that again, please. I didn't hear it.
I said that I think that maybe
you heard it.
I'm going to explain, right? Just kind of just being in transparency, because some of you guys, well, a lot of you guys don't know me, right? So my issue, right? A lot of it is just being greedy, right? And just not being satisfied in the moves that I may catch, right? And
how many tips do you catch?
Hold on, Todd, can I finish, please?
I'm sorry, go ahead.
Don't do that.
No, I'm asking.
So whipped. It just depends on the move. So what when Todd told me about the fib, what I did was I had showed him an example. I was in a Nas move, right? And I knew that it could have been a retracement. So what I did was I fibbed the candle before the entry that I was in, so I could see where the pullback was going to be at, right? And then I looked on the lower time frame and I saw that there was SSL, right? It was sell side liquidity. And so that's the way that I'm using the fib, right? And then trying to apply it to like the daily and the weekly candle. right? But I I wasn't trying to make this a big deal. I was just
Well,
asking. I'm sorry.
I think is not a big deal. But they when they look at your chart, they don't understand. So that's why it's um, causing confusion, which I don't want it to cause because you have you have a system and you find setups. You don't have a problem with that. You're like Leandra. Y'all see the market. Maybe the chart does your chart markup looks different from somebody else's. Most people in this group aren't using buy side liquidity, sell side liquidity, right? Not saying they don't know what it means, but they're not putting that on their chart. I don't want that to be a distraction or a cause for confusion, which is why I try to kill the talk on the fib, the fib part of it. I think that using a fib on the weekly chart or the daily chart is a benefit because it shows you where equilibrium is or discount or whatever terminology you want to use. I think it shows you where price is likely to come before it has its continuation. I think all of us benefit from that. That's why I use it on those 2 month charts or on the monthly chart or on the quarterly chart. It just gives you the direction to trade to until price gets there. So, I don't want any confusion, to come from that.
Todd, Todd, wait, I
What's
have a
up?
question. You said like you made mention of like she can see trade. She can trade, right?
Yes.
So what I don't understand right here is that if she can see trade, she can trade, right?
Uh-huh.
Is it like the way you taught her to trade, or it is just her own system
No, yeah,
before coming to this group?
before coming to this group, she trades ICT. She just trades lower time frames.
Like
Okay.
from which minutes to which minute?
Scalping. Scalping.
So she always scalp, right?
No, I'm
Naima,
not a scalper.
you can answer those questions, Naima. Like you can
Uh,
you can talk
I
about.
don't, is it Naima or how do you
Okay,
pronounce your
so
name, ma?
it's Naima. So
Naima.
compared to how you guys trade, right? And the things that I've learned, just how you guys may move concerning the weekly and the daily.
Mhm.
Me catching 2,000 pips or 1,500 pips, right?
Yeah.
That may seem small to you. Now I'm talking US 30, I'm talking NAS, so they move, they have a lot more liquid, right? Um,
Wait,
but an
hold on.
intraday trade, pardon
Hold,
me?
hold on, please.
We don't be catching no 1,500 pips.
See, the only thing I'm going to say right here is that, you see, I don't know about anybody else, right? For me, and what I've understand so far is that whatever works for you, you should stick to it. There is always a room to learn new things, right? You
Yeah.
can just keep doing what you do, right? But don't allow this new stuff, contradict what you are doing before.
But it's not. That's
Okay.
it's not
I,
because
I haven't finished
when
either ways.
oh
So
You let her
if
finish.
you if if you see everybody, like I'm talking about top trader out there, it doesn't matter who the trader may be, Q banks, whoever it may be out there, right? When they are having issue, they tend to circle back to where they start from. And
can I get I'm
if
sorry, I
you
didn't
are
mean to interrupt
if you are
you. Go
making
ahead.
money, right, with whether scalping or whatever, I will advise you to stick to it. You can always make it better.
But that's why I'm here because I so I've, gotten to a certain level as a trader, right? No means by any means perfect. I have a long way to go. But I know that I always can improve, right? And I always
Uh-huh.
can grow. And when I was talking, when Todd and I had a conversation, and he introduced the fib and, not being
Okay,
intimidated. Can I
madam,
finish? Please.
I know I want to complete my
I was
statement
very,
first.
oh God.
So you are saying that is why you are here, right? I know what is like, I can literally sense what is going on right here. You see, ICT said time is fractal, right? This is the same thing. You just need to apply to your trading strategy. How you see buy side liquidity, sell side liquidity in the lower time frame is the same way without fibs and all of this. You can see it in the higher time frame. That is only thing you need to do. You just need to sit down, work your way up. Instead of you using like this lower time frame because you want to be seeing like a huge ass move, then just increase your time frame and look for the same thing you are seeing in the lower time frame and apply it rather than like making headache with this Fibonacci retracement, 50% goldie zone, all of this.
Sorry, can I just say something?
Go on.
Have you finished, Andrew, or you gonna add
Yeah.
it? Naima, hi. I trade US 30 as well. And if you have a system, like Andrew's saying, stick to that system. But and I think I'm getting from this conversation that you want to still improve your trading in your trading journey, your trading style and everything. Well, trade what you know and what works for you, and then back test things that you want to try out and things that you're considering and applying to your playbook, because you can have one way of making money on these charts, and then you can have another system, another play, that if the market does this, then okay, I'm gonna use the fib, or I'm gonna look at a higher time frame. So there's multiple ways of improving and looking at the charts. But if you have a way of making money, then stick to that. And psychology is always a good way to improve. Like, was it Andrew or Todd was playing Oliver Velez? Yeah, it's an ongoing journey, so don't put too much pressure on yourself to include everything we're talking about today on this call, or what we talk about in the week or in the Discord chat. It's no pressure. If you're making money your way, then stick to that. But I wouldn't implement things that you're unsure about on your day-to-day trades. Like, back test it, figure out how you want to include it. If you don't want to include it, if it doesn't work for you, don't do it. It's all up to you at the end of the day. Like, there's no pressure to include fibs or trend lines, or yeah, it's all up to you and what you want to add to your playbook to improve.
Right. And I genuinely appreciate everybody, your concern and everything that you all are saying, and I'm going to, do my best to apply it. I just believe that, you should be around people who are better than you, and yeah, I may have some experience, right? But I've even heard about you, Leandra, and I'm like, well, let me look at your charts. Maybe I'm not seeing something. And I think it was Kim that was talking, and she was looking at my chart, and when she pointed out the hour, and I saw the hour earlier, but I just wasn't sure because of all of this up here. I had already fibbed the daily candle, and there was the 50% there. So I was like, well, this is a really large confluence. So this will probably be and it's right. That's 3 confluences, right? So like for me, when I talk about charts, I know everybody doesn't trade indices, but because she showed that, or she pointed that out, right? That's 3 confluences for me. That's buy side taken, right? That's the last candle from Thursday, right? And that's the high from Thursday. Also, it's the 50%, I guess you guys call it the 50% zone on the fib. So I like I said, maybe what would probably help me, just listening to everybody, And thank you, Kim, because I wasn't gonna mark that up. So thank you. That just maybe fibbing the weekly or the daily, right? Maybe that'll help me, and just starting there instead of trying to fib everything, on lower time frames. So I think maybe I'm gonna just start with that.
Can I ask you a question? Which time frame do you start with? Yeah, the start of the week. If you
I usually start. So okay, I use AMD, right? So I'm looking at what Asia and London is doing. I'm using accumulation, manipulation, distribution, right? So if Asia accumulates, right,
Sorry,
this is just a couple of models, huh?
Which time frame?
Well, that's what I'm saying. It just depends. So usually the 30-minute, the hour, right? But I usually don't know. I usually don't really pick up a setup unless it's like far away or something. Sometimes, unless I know, okay, what did Asia and London do, right? And so in talking with Todd the other day, he was telling me, because I think I had took a retracement trade, right? And he was, because it was a 30-minute imbalance, right? But the imbalance got ran and it ended up buying off of an order block below it, right? Which was the 930 block. And usually a 930 something, price there's some kind of activity there. And so he was like, it was a gamble to take a bullish move because on the higher time frame, we're bearish. So then I was like, okay, I really, at the top of the week, I need to be paying attention to what's happening on Sunday or, like as soon as, or on Saturday, right? So that I'm trading with the trend. Like he was telling me there's nothing wrong with trading a retracement, but a lot of times I like to hold trades, right? And if I'm trading in the right direction, I'm able to read price as it's happening, right? Sometimes. And I can hold a trade to a certain zone. But if I'm trading a retracement, then sometimes it doesn't work out. So when he was talking to me about the fib and talking to me about, just using higher time frames, it connected for me because I was like, well, if I can find out, how the market is moving from the beginning of the week, then I could catch a move at the top or the bottom, and I could hold it even if I take partials. So that's why I was saying that, I welcome new information to get better, if that makes sense.
Yeah, no, that makes perfect sense. And I would show my chart, but I just don't want to confuse you right now after this conversation today.
Yeah, and I appreciate everybody's patience on here. I wasn't, trying to do all of that. I had the chart. I was marking up the charts, and I just wanted to see, if you guys had anything. And again, Kim, thank you for confirming, because I was just not even gonna look at that because I was so focused on what was above, and that's a really good zone. It's 50%.
Hey, Naima, just so you normally, what happened today doesn't normally happen. It's very interesting. So I'm glad that we had that much conversation, those spirited conversations around that. I think that's important, but also I think going forward, you have to you got to fib that weekly candle at least, because what me and you talked about, how price went above last week's candle and started selling, sold all the way down to that imbalance. Those are the things that from our conversations that you're looking for. If this week price sells first before it buys up, it's going to give you a new opportunity to do something similar, right? It's just going in the opposite direction this week until price gets up to your zone, right? So you might have an opportunity. I don't know how many pips that is from where price is now to buy up to that zone? You probably know, but at least you have some framework around the trades that you're trying to take. And I think it's important that everybody talks, like Kim and Leandra, everybody, because everybody is going to learn or at least pay attention to the pair now. You know what I'm saying? Whereas maybe before we don't have a indice conversation every week. Maybe we will going forward. Maybe we won't. But it's an opportunity for people who don't speak, because there are 25 people, 30 people on the call who might also be looking at the trade setup. So, you know, I think that's good. That's a win. But, you know, the fib, I would definitely do it on the weekly candle, the daily too, but, you know, definitely the weekly candle.
Okay. Oh, you said the daily. Let me write that down. The daily and the weekly. Okay.
Well,
So
to me, the daily candles are easy when you get the bullish order block or the bearish order block.
Sorry. I was just about to ask that as well. Do you just fib the candle, or is it an order?
Well, she doesn't. She wasn't using the fib. She wasn't using it. So
how did you teach her to fib? Did you teach her to just fib the candle, any candle? Wait, let me finish. Or did you teach her just to fib like any candle that closes?
Oh, no. So we were.
Let me finish.
Please, baby Jesus.
Yeah, let me finish. Do you teach her to fib any candle that just closes, or an order block candle?
Are you finished?
Yes, I'm finished now.
Okay. Again, it's the same answer. We talked about the weekly candle. So I think either answer is fine. You know, even if it's a weekly candle, I would treat it the same way, especially on indice, the same way I would do a monthly candle. But if I'm trading a pair, a US 30 or whatever, when I get that order block, I'm fibbing the candle because I want to see it come back to the zone. Generally speaking, I'm not just going to fib a regular candle for a pair, right? I'm not doing a regular candle for a pair. But if I'm trading the indice, I think the options are wider because it doesn't take as big of a move to get paid. You know what I mean? Leandra, you're probably one of the best US 30 traders that I know. You can run the bag up. So I think there's opportunity to, if you fib individual candles on US 30, especially the way it's been moving lately. If a candle moves 400 points, 600 points in a day, yes, I would fib that candle. I think these the answers are a little bit more complicated because the range of the candle, you know, if it's a big range, then yes, I'm fibbing an individual candle. Generally speaking, I would reserve the fib for an order block. But it just depends on the range, right? And you know, the reason why I told Naima about you is because y'all can see moves. Whatever time frame y'all see them on, you know, like that's between y'all, you know, whether you're doing the 30-minute, sometimes you down on the 5-minute. I don't think y'all have a problem seeing the move, right? The problem comes in on the other aspects of trading, right? And we all have problems on various aspects of trading. So I think any trader who has success just needs a group to come into, right? Not that I need to change anything that she's doing trade-wise. All I suggested was, hey man, if you would just get the direction from the higher time frame, continue to do what you're doing, you're probably going to be able to collect a lot more money or see a lot more trades. You understand?
Yeah.
So, you know, that's all I was saying. And the conversation kind of went a little left whenever everybody was looking at her charts because she marks them up a little bit differently. But I think going forward, I think she'll have just as much to offer as far as showing what she does, just as much as she's learning what we might do. You know what I'm saying?
Yeah, because that's how you taught me, introduced me to to swing trading and the higher time frames on pairs, and then I transferred that over to US 30, and it's been a game changer for me. But it's also, that's what I'm working on now as well in terms of my psychology and my risk, is that I'll see the trade on the higher time frame. It will play out perfectly to the T, but then I can't control my leverage. So then I end up messing up, like sabotaging myself in a higher time frame trade, which will go, I don't know, could go for months or days or hours, and then
Exactly.
like 1,000 pips over 2,000 pips, 3,000 pips, and I would see it and I will miss out on it because I've entered in on like a 5 second, but I've over leveraged and it's pulled back. But I can enter in on the lower time frames for the bigger time frame move, and I can enter in a low time. But now I've learned I've got to have my playbook and have different strategies. Okay, on it, if I'm entering on a lower time frame and the charts are not looking like, it looks like it might consolidate today, or it might range. So okay, cool, I'm getting out on this 30-minute order block, or or if it's a 4-hour time frame, I'm seeing an imbalance. Okay, cool, I know it's going to run for a couple of hours, maybe an hour, half an hour, till this 4-hour or till it fills this 4-hour imbalance. Cool, I'll leave it in and then I'll take it out. But then these higher time frame ones, they're still getting me a bit, because I can see this. Let me share my sorry, let me get my screen.
Oh, I need to stop sharing. You stop.
Team, any way you can help?
Sorry. Hello.
I said, any way you can help?
Any way I can help.
Yeah. And Auntie, we are not attacking you, like we are just giving opinion.
No, I don't feel attacked. I just he asked, Todd asked if anybody was marking, had any charts to mark up or wanted to review. And I had asked Todd before, the call, because I'm in another community too, and we mark charts up and stuff like that. But because I know that, Todd has the ability and you guys have the ability to see things from higher time frames, I'm always like looking to grow and learn. So I don't feel attacked. I'm sorry that this turned into this, but I was just sharing.
But do you know structure?
Yeah. Oh, yes, sir. I know market structure.
Okay.
And I know that my charts may look different to you, right? But I do trade ICT, sir. As you can see, I am aware of different areas of reversal, right? Whether it be an FVG plus a breaker block, whether it's it's buy side liquidity, sell side liquidity, if it's and those are the main things that I do trade. I trade order blocks, I trade BSL, SSL. Now, usually with liquidity, I'm looking to I'm looking to close a trade. Like if I see BSL or SSL, those are areas where I'm trying to close a trade that I'm already in. So are you asking me specific questions about the kinds of market structure I use? No, I don't use
Because the reason why I'm
a
just
flag.
asking,
I don't use I don't use those kind of like some people, they use like retail styles of trading. I don't use that. Like I'm not because and Todd and I had this discussion, and I have a friend who their charts are marked up look like Picasso's protege, okay? But I cannot function like that. But at the end of the day, if somebody uses an indicator, they use 10 indicators. If
Mm-hmm.
you are making money, it doesn't matter. You know what I'm saying?
No.
That is just how that's just how I see the market, you know? But if
Yeah.
you see the market using indicators, or you see the market with a bunch of things going on in your chart and you're successful, right? Then that's really all that matters. You understand what I'm saying?
Yes, ma.
I don't know if you're like asking my level of competency.
No,
Um,
no. I just ask if you understand structure, you know.
okay. And maybe there's something you could show me. I mean, if there's something that you see on my chart that you feel needs to be better, or I'm not coming like as if I know, you know, yeah. You can ask Will. I'm not, you know, I'm not coming like I got it all together. I really am coming. I shared my chart because, you know, you may see something, somebody else may see something that I don't see. Example, Kim. I'm glad she said that because I was gonna look over it and she pointed it out.
We appreciate you sharing your chart, Naima.
Very much.
Yes, thank you. And we learned some stuff from you as well, so we're all Hello, can you hear me? Can you see my chart? Hello?
Not yet.
Not yet.
No.
You can't see my chart.
No.
No, we see IC4 clearly notes dash Todd Zoom.
No. Why is it not? You see it now?
No.
Are you sharing notes or the trading view chart?
I'm not sure.
You probably need to reshare the screen, Leandro.
Yeah, I'm trying to not share the screen again, but I don't know. I don't know where that is. Where?
For the music library, we're seeing the charts.
Okay, are you seeing it now?
No, we see Spotify.
Oh
Yeah.
Lord. No. Oh, because I got two screens.
This is some horrible music, by the way.
I think it was mainly gospel music, from what I can remember.
There you go. That's the chart.
Right. Can you see it now?
Yep. Nope.
You see it now?
Yep.
Cool. Little bar tasting it. Right. So, right, this is how I would go looking at these charts at the moment. So we have a 2-month bearish order block. So this, I've already deleted a lot of information, but fib this to find my 50% and my 78.6%.
Mm-hmm.
And then we'll go down to the month. Really on. Go down to the monthly. Prices come to looks like the 50% of that imbalance on the monthly, and then continue to sell. That's more indication that price is selling for me. This one's a little bit. So the 3 weeks got 6 days left, but this is drastically dropped. I don't like the way these candles are looking. But
what did you say about 6? You said 6 days left. Is that what you said?
On the side here, it says 6 days left until this 3-week candle closes. But I don't like looking at the 3 week because it doesn't give me the information that I need sometimes. The 2 week is better for me. So I've already marked this up, this 2-week bullish order block, OB, because on the 2 month, we've got 1 month and is it 7 days? 1 month and 7 days. So that is about 5 days in a week. So this to me, because June starts midweek, so this could sell and then consolidate for the rest of that week, the rest of the second week, or like start formulating a reversal, a chalk, that week on the second week, the first week of June. No, it's on the 30th. It starts on a weekend.
I have a question. So since you started like using higher time frames like the daily and the weekly, how many, like, what is your pip count on average? I'm just trying to see like what to expect, or like what are you, if I was to take, like what do you do daily and then what do you do like on, like do you hold it, like do you hold a warner for a week, or
Because
because
I'm trading top
Mhm.
step, I don't hold it for the day. I just normally get in and out, so intraday.
Oh, you trade futures. Okay. Yeah, I was with Top Step before.
So it all depends on what move I catch, or if it's like London session or New York session. But mainly I'll just catch like the full move or retracement or whatever's available in the kill zone time.
You mean for the whole day though? Like you'll hold it for the whole day?
Not really, because during New York session there'll be a pullback to London session. So depends on what the chart looks like, what it's saying. If it's saying it's going to continue selling or continue buying for the rest of the day, then I hold. And if I've got time to look at the charts all day, because I'm not I'm not going to risk a full day and then not take any profit or anything from that, then I'll get out in. But majority of the time, I've got a high contract on, and I know where it's going, and if it's already gone there and made what I need to make, then I'm getting out.
Okay, so it's like maybe
like for the full move on US 30, because there's literally no need. There's no need for me to stay in on the full move. So this weekly now. So now we know that we're in a bearish trend. We know that we're in a bearish trend. We've got a bearish order block on here. So I'm going to fib this weekly candle. So that's perfect for me. So that's telling me that price was most likely come to this minus 27 in this 2-week bullish order block. And in between the minus 27 and 61 is an imbalance. That's telling me directly prices come into this area. When I go down to the daily, boom, this is just golden. This is telling me everything I need to know. I've got an imbalance here between the 61 and the 78. And I've also got a daily bearish order block. So that's either telling me price could, with this daily bearish order block, depending, because next week is a 4-day week. If I'm correct, you have a bank holiday. We USA people, we have a bank holiday on Monday, so markets are closed. Is that right? Yeah.
You are correct.
Yeah, I think Monday's Memorial.
So that makes it a 4-day week. So on 4-day weeks, there's so much, the news has built up so much over the weekend. Tuesday, Wednesday, Thursday, it's going to pop off. It's going to be fast. And because I have to fit everything into 4 days. So that means that price could fall back into this daily, continue to sell to this 2-week order block. Don't forget the top of this is a 2-week, and then it could buy back up to the 78. or price could buy back up to the 78 at the start of the week, or gap up, whatever it might do, I don't know, and come to this imbalance. Yeah. And I like to put the middle line in because that represents the 50%. And I've got my weekly golden zone, which has an imbalance. Weekly golden zone has an imbalance above this liquidity here. So that's telling me that price is most likely going to come above here because this imbalance, this daily imbalance is huge. And the 50%.
Yeah, that's like an FEG plus a breaker too, so I like that area.
The 50% of that is up here above the 65%, towards 76, 78%. So most likely price is going to feel that come to 78. That's what I'm seeing on.
So you feel like price is going to retrace first at that golden zone, and then it's going to buy back up into that daily?
Sorry, say that again.
So basically, you're looking for price to sell in that golden zone, and then you're looking for it to go higher into the daily, correct?
Sell from the golden zone and then go higher into it.
Yeah, is that what you're saying? So you're looking for price to sell where that breaker block is, and then you're looking for price to sell where it says I can't read it, but it says the daily. Okay, so that you're looking for price to sell in the gold area and the purple area?
No, this is a golden zone. So I'm just so I know because I'm going to delete this fib. So I know that this is a golden zone. Okay, cool. That's the golden zone. So that's a 61.50. And this one's a daily imbalance. So the 78, I normally mark that up as well. So I know what that is. So when I delete this fib, I know what's going on. So I don't want this fib on.
Are you done?
1 second, because I know you've got a lot to say.
No. I'm not saying so much.
Leandro, your ass is very rude today, aren't you?
Or whatever, you. Actually, where am I trying to thought? Right. So my well, I'm gonna put this daily as well. Because I want to see what's on the lower time frame. I'm gonna delete this. I'm gonna delete this weekly. I'm gonna delete that. And then I'm gonna fib this daily. So I know what's happening on the weekly, but I want to check what's going on this daily. We'll go to the 12-hour. I like to look at the 22-hour, 18-hour. Okay, yeah, that's giving birth. And it's already pulled back.
Wait, hold on, Leandra.
Hmm?
Hold on first.
Okay. Where do you want
So
to go?
go back to was it the weekly or the daily you were on?
Just a minute ago.
And-
Just a minute ago, I was looking at the 12, 16, 18, and 22, and the daily. I go down from
Go
the
back
daily.
to the daily. I think it was the daily.
Yeah.
Right. So this is where like everything you are doing is very right, right? But why are you not talking about the market structure? Because you can
But
literally
there
see,
is, I'm sorry, there is market structure.
Sorry,
She's talking.
the breaker structure here.
correct. You can literally see market have broke structure to the downside, which is form of like a change of character or whatever. So which okay, market may likely pull back. But in this case, you don't even need to even think about like the fib of the daily candle again or something. Because this market structure is basically from the weekly or whatever, or maybe the first fib you fibbed is from the weekly time frame.
Sir, with all respect, I don't know you, sir. It's nice to meet you. I was listening to her, and yes, she was using a fib, but she was talking about market structure.
Not as much, so I don't understand what he means.
But
Like the breaker
mm,
structure. But I've only got my chart in
I
weeks.
I understood.
Oh yeah, this is the other thing that I was looking at is these gaps in price. Do you look at gaps in price as well, Andrew?
Of course. Yeah.
So this is what I saw actually on your chart, Naima. Yeah, that's what actually I saw as well. The 4 hour. Yeah, the 4 hour. I saw it in the 4 hour. So I saw this is where I saw the breaker structure on the 4 hour. So I saw this breaker structure here. Because think about it, this last week, if you think about last week's not there, and we're seeing where price is moving, price really could have just continued buying last week, but it decided to sell. I think, yeah, because really and truly it could have gone above this liquidity, this buy side liquidity, and gone up here to the 78. Because I think the 78 is up here on the higher time frames on that 2 month. So it's created liquidity here on the higher time frames. Sorry, I just backtraced myself. But it's creating liquidity on the higher time frames here. So I'm expecting that to be taken at some point during the future. Don't know when. So we've got a breaker structure here on the 4 hour. So that happened on Wednesday. And then we've got imbalance, which was created on the 15th, Thursday 15th. I would have been expecting price to buy, up to this imbalance up here, then to sell back down, but it didn't do that. It just straight continued to sell on Wednesday of all days. And then what got me on your chart now is that I saw this breaker structure here on the 4 hour. Price sold, didn't enter the imbalance, and then pulled back into probably 50% of that 4 hour imbalance. Which let me check. Let me get the downloads.
Yeah, Andrew.
So that's above the 50% of that. 1 second, let me just finish this train of thought. And then pull back to the 50% of that imbalance and then continue to sell and fill this gap in price to end off the week. What I saw in your chart, Naima, is on the 30-minute. I understand exactly what you were talking about in terms of price created a imbalance, so you're expecting a pullback. And the fib, I wouldn't have fibbed this 30-minute candle. It's the 4 hour candle that created the bearish order block for me. So if I did this bearish order block,
Mm-hmm.
then it shows me the 78.6 price brought all the way back up to that, pulled back it up to that 78.6 on Friday.
And that's what I was trying to say. Like, I entered in at the 50, right? I mean,
But then you fibbed
I
it on
opened,
30-minute, didn't you? You fibbed
right.
it.
I didn't fib it on the floor. I didn't think to do that. So I fibbed it on the 30, I mean, yeah, on the 30-minute. And so it sold for 1,000 pips, right? On the 30. I mean, yeah, on the 30-minute. When I fibbed it, I mean, I already had that imbalance marked up, but I was like, well, let me try to use the fib, right? And
Yeah.
what ended up happening was it sold for 1,000 pips, and then it hit that 78.6 and really sold. And I was like, well, dang, like I should have. That's why I was asking earlier about the 50% and the 78.6 and which one was better, because that's what happened on Thursday or Friday. You
Yeah.
understand what I'm saying?
Yeah, I understand what you meant. But if you look at this 30-minute chart, what you fibbed, you just fibbed this big long black candle, didn't you? This one
Yeah,
here.
from the wick,
Yeah,
from
you just
wick
fibbed
to
that.
wick. Hmm. I mean, I
Sorry.
marked up I marked up the whole entire imbalance from before I even used the fib. I was just trying to use it as like a confluence, but
But I haven't listened to it. I've listened to ICT in a while. But I can presume that the 50% of this is it impulsive candle? Impulsive candle. Let me put the down box on so we know what we're doing. From this wick to this wick, the 50% is where the 4-hour 50% is. On
right,
this,
and that's where I got in, and you see where it sold. It
you
hit
got
it right. That first time it hit it,
you got in for a buy
it
or a
sold
sell.
for a sell. It sold for 1,000 pips, right?
Okay.
And then price was playing, and I got emotional. But
Okay.
price was playing, and I was like, well, maybe it's not going to sell anymore. It brought up all the way to the 78.6. So when I was going back to look at the move and I put the fib on there, I was like, man, it seems like that 78.6 was a better zone. So that's why I was asking you guys about it, because it actually happened to me like in a real move.
No, that's happened to me before. I've been caught up in the lower time frames and I missed out on the higher time frame analysis because I've been like so conscious about just getting into the move and getting it because it's such a good one to get to. Because when price feels imbalance, it's kind of easy. It's a no-brainer. But ICT says that if you have an imbalance like this, just get it at get the buy at the 50% and get out. Get out the trade. Get out the trade at the 50%. If you're unsure, because price really could have just come to this 50% on this gun box, on this imbalance. Let me get this 50% here. And sold.
That's what I was expecting it to do, and price did not do that.
But if you look at all of this space here, plus there's an imbalance right here. Price is going to fill that. It's on a lower time frame. If you look on the higher time frame on this side I've got the 4-hour. 4-hour time frame. If you look at the 4-hour time frame. Let's see it. Let's look at the 4-hour time frame. How much space is there? How much imbalances? How much of the imbalance is there on the 4-hour? It's a whole candle. Look, even from this, it could have gone all the way. Sorry. Could have gone all the way to this black block here. Really and truly. If you see on the 30-minute, there's an imbalance there as well. So it could have gone all the way up there. Really and truly. Because but it just stopped at the wick. So from here to here, this needs to be filled. All of this needs to be filled. Or it doesn't have to be filled. It could, like I said, could have gone from 50% and gone down. Because we're on a lower time frame. We're not on a higher time frame on 30 minutes. But that's when you have to step back, because this is what I was asking about what time frames do you trade? And if you trade ICT kill zones?
No, I don't. I should. Like sometimes no, I don't. I started to try to do like the macro times, but I have not traded the kill zones. I haven't. But that's something I can improve on, and I maybe can just focus on those kill zone times. I usually just mark things up like in advance and then set an alert. So where I get messed up at is I'll like on the 1 minute, I'll try to read like immediate price action. And sometimes that works for me, and then sometimes it doesn't. So then it causes like an overexposure to the market where, because US 30, like it'll do whatever it wants and it will not follow structure sometimes. So I'll think that they're like thing it was this week, right? I don't know if you remember. I think it was like Tuesday or Thursday. So price it manipulated lower to I think it was London's low, right? And so it reacted off of London's low, bought up. So I'm in the buy. It shoots right back. I'm saying maybe I got in late a little bit because I didn't realize it reacted off of London's low. I just saw that impulse at 9:30. And then you would think, okay, it's going to go at least 1,000 pips. That thing went 400 and caught the block at the top of the 1 minute and just bled the whole day. And I was not expecting that, So like you said, if it's just about me taking the money. But I do want to implement, because if I was looking at the 4 hour, right, then I would have seen that gap and maybe I would have entered on a higher I would have seen that there was room for price to continue to buy, and maybe I would have got a better entry, But
Yeah.
like I
And
said, the first
you could have
entry
just,
was
you could have just held your buy. You could have just
no. I was at the sell. I was in the sell.
Oh, you was in
when
you didn't get in the buy.
yeah, so price hit for 1,000 pips, right? Got in kind of late, but price hit the first time, because what's happened? If you go to the 30-minute, you'll see that price was playing around, right? And it eventually bought, and then it bought up to that golden zone. So that initial sell, right? It initially hit that area. It sold for 1,000 pips, and then it started to play. And then I was like, well, maybe I'm not reading price properly. And I got caught up in that consolidation. You see what I'm talking about on the 30
Yeah,
minute?
I can understand what you're saying, but I would advise you to look at ICT kill zones, because that would help you out a lot. Because this candle, we're on the left hand side, this is a 4 hour. That whole sell happened in like 4 hours. That represents 4 hours. So if we look on the 30-minute, let's hit control from 10. So 10 o'clock. 10 o'clock, price sells, pulls back. So this would have been your entry at 11 o'clock, and then it just continues to sell until 12:30, 1 o'clock, and then 2 o'clock is when the next candle starts. And then at 2:30, that is when the opening bell for New York session starts. So London session overlap starts at 1:30. That's when New York session opens. So the London session is still continuing, and it's the overlap. So the ICT kill zone is, I think it's from 8 till 10. 8 till 10 in London. And then from New York, this is British time, by the way, I'm talking about.
Okay.
For New York session, it's three till 4, because then after that, the New York people go on lunch. So can you see this
I
price
mean,
action
I'm
on?
usually up on the charts around 8:30 to like 10:30, but to be like I'm consciously only trading at that time, I'm not that disciplined. So I could implement that. That's
Yeah,
true.
that would help, especially if you're looking at lower time frames as well. Because if you see this bullish order block here, if you fib
Mm.
this bullish order block on the 30-minute, look where it goes. It fills the rest of this imbalance. And you can get in, and this is all in hindsight, at the 78. And so if we go down from the 30-minute, the 15-minute, the 15 minutes giving you an entry, better entry at 2:15. So that's 15 minutes before the opening bell happens. It's a bit risque, but it's giving you that
Yeah,
entry.
I was looking at that too, but I was like, either price is going to tap that order block or it's going to tap that previous day low. So that's what I was concerned about. But I had that part marked. So
Well,
where are you going to enter?
if there wasn't any like relative like high impact news on Friday, especially I don't like trading New York session past like kind of 3 o'clock on because on Fridays it always consolidates, so it just pulls back. So I don't really care for it. You don't get any big moves. But if you was to catch this buy to fill this imbalance, we're on the 15-minute on the left-hand side, by the way, guys. It comes back to the 61, the golden zone, at 2:15. So you could have got this move at open bell and just got out. Or you could have
Question, what time was that candle? Can you put the bullish candle? Not that one.
This one.
The
This
one
one.
that yes. Oh, that was at
So
1.
that's at 1:15. But
Okay.
the new
I know it retraced it. It came back into that zone. No, this is helpful because I would probably do that going forward using the fib. And that's what I did the other day when I wanted to close a trade, is I just fibbed the previous candle to see where it was going to go into, like how deep it was going to go into the candle. So
But if
I
you
appreciate
But if you want to marinate this with higher time frame analysis, like more confident in your trades, you've got here. This is the end of the distribution of this candle, of this 4-hour candle. That's the end of it. And then you've got this wick on the end of the 4-hour candle. So if we go back down to the 15-minute, the 4-hour candle ended here
right
at 1:45. 1:45 in the afternoon ended, and then the new 4-hour candle started. So you're waiting for the price to pull back into this 15-minute order block, because you know that price needs to fill this imbalance here. You know that price needs to fill this imbalance here.
Right.
So you can wait at ICT kill zone for an optimal trade entry on a lower time frame, because you've already got a higher time frame confluence that price is going to pull back and fill this imbalance. Do you understand what I'm saying?
Absolutely. I'm seeing how more just how I can use the fib too.
So you can get it, and you can aim for here, That's nice. What? 462 pips. Or you can aim for the 78, which is like 548 pips. And how long does that take to complete? That's from 2:15 to 7 o'clock. It's long, 7:15. Because on Friday, it price doesn't move that fast. That's what I didn't like. So yeah.
Okay. Well, I appreciate you analyzing that for me. And I
But
can
yeah,
see like what I could have done better at the beginning of the day. Actually, I was not really paying attention to the charts in like at the very beginning. By like 9:30, I wasn't looking at it. But when I saw that imbalance, again, I thought price was going to hold right there in the middle, but
yeah.
like I said, it only went 1,000 pips, and then it bought up and then it sold. So I'm
Mm.
going to start like fibbing like the 4 hour, the one like the daily, and the weekly candle just to get a better perspective. So
But don't just fib it if you can't see anything there. Like sometimes, like I
mhm.
said about the 3 week candle, sometimes I don't see anything there. So I don't fib anything or I don't put any notes on the 3 week. Like
Okay.
I have to see something. I have to see, market structure or something on that time frame that makes me think, oh, this is the direction that price could go, you know?
Mhm.
So yeah, don't just fib for fibbing sake. Like
So I have a
fib,
question. Do you fib it and then say like price goes to like it'll like the 50% or the 78.6 might be in a certain zone? Do you go like to your lower time frames and see if you can find an entry?
yeah, just like
Um
we did now. Like
no, because you were saying like don't fib it just to fib it. So like do you look for just like how Todd was saying, like, if it breaks structure and it goes to the others, to the upside, then that means price is gonna buy and vice versa, right? So, I mean, do you still do that? Like, you'll just take the weekly and fib it, or take the monthly and fib it, and then see if you'll find something on lower time frames with more confluence, of course. Like, I'm looking for an actual setup on a lower time frame, but like, is that how you start or no?
yeah, so I start on the monthly. I start on the monthly, especially at the start of the month. Or I even look like this week. I looked at the 2 month. The monthly wasn't saying much to me,
Mm-hmm.
so I need confluence that this is going to continue to sell next week or the next 2 weeks because I see an imbalance here where it says liquidity. So I'm on the 2 month. Okay, there's 1 month and 7 days left. Let me go down to the 2 week. Okay, that's finished. It's closed. Great. So we look like we're selling into this 2 week bullish order block. That's brilliant.
Mm-hmm.
The price is going to continue to sell at least the next week, at least because there's a huge wick here. The 50% of the 2 week is here. It's 39329. Price could hit this 2 week and buy back up. I don't know. But that's when I'll have to analyze it daily, do a pre-market analysis before I come to the charts to see what's happening, to see if price is still bearish or bullish or what's happening with the markets. And then, it's all about just reanalyzing it, just because at the end of the day, I'm just analyzing it for a prediction. I don't know if it's actually going to do that.
Right. I appreciate you. Thank you so much for sharing that. Do you trade anything else? Or do you trade any other industry or no?
Um, I look at gold. I look at all of them. I do look at all of them, like SPX, NAS, to see what direction they're going into, see what's happening.
Mm-hmm.
I don't trade NAS, don't trade SPX. I might start trading that soon. Gold I look at as well, and the dollar I look at. So I looked, I think on Friday, I looked at the dollar was selling. It's I'm a bit concerned about that. What's going on here?
You think maybe I could like send my charts to you or something?
Sure. I just don't
Or we
know.
could, huh? Now saying like, do you think it's okay if we like share charts?
Yeah, sure. No, I'm just looking at this dollar looks a bit like USD. But yeah, I look at UJ as well, and GJ, some other peers. But yeah,
Mm-hmm.
that's about it for me. Mainly, I'm just on US 30 because I can see it on higher and lower time frames. Like I can be on a 5 minute and I can
Yeah,
start.
sometimes I like trading the 5 minute, but I I've moved more towards like this, or tried to move more towards like the 30 and the hour, because sometimes the 5 minute, like even though I could give you a snipe, I'm saying for me, right? I may not it the trend, or it may be like a pullback, right? And it may not the trade may not last as long. So that's why
That
I'm really excited about trying to trade higher time frames.
Well, that's when you
And
maybe because I'm like I've married like the higher time frame analysis with my lower time frame analysis. So I know that okay, this structure on a lower time frame is an order block on a higher time frame. So I
right.
know that when I'm on a lower time frame, I'm gonna wait. Because if there's back-to-back order blocks on a lower time frame, let me see if there's one on this one. Oh, that's a 30-minute one. I don't think I'll find one on here because price is just been leaders. I can't find one there. Um, well, there's back-to-back order blocks. I'm trying to find one on the time frame. Can't find one. But yeah, there's back-to-back order blocks. Like there's one, and then there's another one.
Mm-hmm.
On a lower time frame, I'm gonna wait because I know on the higher time frame, like the hour or the 4 hour, depending on what time, what kill zone I'm in, what session, is it London or New York session? Has the Asian session been ran? What news is coming out? Is Trump gonna speak? Should I get out of the markets because his mouth is very volatile? That's why I said I don't really count the pips that much. I only just like can't move. Sometimes I get mainly it's like 100 or 150 pips. That's what I'm going for nowadays. But
Oh, so you average like 150 like 150 like points or 115 pips per per trade? Is that what you do?
points, but none of my trade setups are because I'm on 5 second time frame.
Oh, you trade the 5 second.
Yeah,
Okay.
I'm on a 5 second, but I'm looking at the 3 minute, the 5 minute, the 15 minute, but I'm also got a higher time frame analysis as well. So I know what's happening on the 4 hour. Do you know what I mean? So I know that okay, I can just be in this trade for a 15-minute candle and then I'm out. I don't
Okay.
need to be in it for a whole hour. Plus I haven't got the time of day anymore. So yeah, that's why I said it's like 100, 150 points. That's all I need. I don't need more. Depends if I've got time to watch the charts to hold my trades that long. At the moment. But yeah,
Okay.
yeah, it's the charts on. No problem.
Thank you.
You okay? Where's your bus stop? Where's my bus stop? Andrew, where's my bus stop? Andrew.
Oh, are you done?
Yes.
Oh,
Yes. You okay? Andrew?
what?
He said, where's my bus stop?
Yeah, like I don't know where you were heading, you know.
Oh, because she was asking me a question. Naeem was
Did you
asking,
finish the analysis
what do you mean?
on US 30?
Well, it's selling next week, but I need to know whether I'll have to wait and see what happens at the start of the week. If it's going to
Okay.
respect that daily bearish order block, because it's going to be a 4-day week, price might do a huge gap because I hear that Trump is talking off his head at the moment about tariffs with the EU, and he's definitely doing 50%. So I need to see how that's going to affect US 30 and other things as well, because if it's a long weekend. So that's why I said I'm not married to that analysis of it's going to buy up to the 78% and then sell.
All
That's
right.
I've marked up those zones, and I said, do you know what I mean? I can't be married to just one thing. I've just got to just let the market do what it wants to do. But when I see a setup that's good for me on a time frame and a kill zone time, and it's respecting everything, then yeah, I'll get in.
Thank you for sharing.
Well, thank you. So I learn a lot from you as well. Keep me on my toes.
I feel like a lot of people over here have an issue, and there's nothing wrong with it. So don't get the wrong idea. I feel like a lot of people over here somewhat still don't understand structure based off the questions that they ask. Okay. Another thing is I feel like there are a lot of people don't know what to look for once price taps into the point of interest. And I don't know if you're there, Todd. I think that is something that we need to look into eventually.
Yeah, I agree. They are lost.
It's not a matter of being lost, Todd. It's just a matter of, okay, we can see there's a lot of people here who see the chart pretty well. Okay. But at the end of the day, structure is king.
Mm.
Okay. And I can understand why Andrew asked, what's her name? Naima, if she understood structure, because she may see structure differently compared to how he sees structure, or how I see, or how everyone else sees structure, you see. But at the end of the day, so if it hits a point of interest, you need to have a validated criteria in order for you to look for a trade. Prime example for me is, I don't even need to show a chart, but if I have a valid point of interest, which is usually marked on the 4-hour, 2-hour, or 1 hour, the price taps into that, I will be looking for a bullish engulfing on the 30-minute.
There you go.
Mhm.
You see what I'm saying?
I agree, but that's where I think people are lost. When I say they're lost, I think that's what I'm talking about. They don't have regular entry criteria, whether it's a
Because,
chalk, whether it's
yeah.
they don't have that, and
No, but
that's
why am I saying that, Todd? Is because even if you fib, you put a fib, yeah? How many times have you seen that price past your 61 or 78% and then dropped?
then
Because
drop.
you never got that bullish or bearish engulfing.
Right.
And I feel like that is something that, I mean, even one session a day or one session a week in which you just,
Yeah.
first of all, just mark up the points of interest and see how price reacts to it, because the market does this over and over again.
Now,
And
share
with
your screen, share your screen.
uh,
Yeah, yeah. Thank you, Noah. That sorry, I forgot to point that out, but thank you for mentioning it.
but
It's
you're
really
welcome, Leandra. Naima, are you there?
Yes, I'm here.
You mentioned something very that caught my attention, and that's part of one of the ways I trade, which is the ADM. Do you know what the
Yes.
ADM is?
Yeah, I mentioned it earlier. It's accumulation. It's the power of three. So
Yeah.
accumulation, manipulation, and distribution.
But
So,
where did it originate from?
um,
That's what I'm trying to
you want
see.
me to give you a
No, I know exactly what it is because that's how I used to trade. But I want
yeah,
to ask
I
you,
mean, that's
oh,
that's what I now it depends. You asked me where it originated from. I'm not sure. I know that I learned it when I was
okay.
using ICT, when I was studying ICT, and I learned it from my coach. My trading coach, right, taught me the power of three, and you can see it on different time frames. It doesn't just happen with Asia and London, right? But I will use Asia and London to determine the direction of the market. Now, with the US 30, sometimes it has a mind of its own, and it doesn't always follow that because if Asia expands or
Mhm.
if London takes Asia's high and Asia expands to the downside, then I'm going to be looking for sells because
Mhm.
London has clearly shown that we're bearish. So I'm either
Okay.
looking for a um, a block or I'm looking for an FEG. It just depends. I mean, every day is different. Um,
So
I
the
didn't know.
ADM originated from the Wyckoff schematic. Okay.
Thank you so much for telling. I didn't know that. Thank you. Thank you for
Um,
telling.
if you go and look into it, the only 2 points of interest that you need to focus on, if it's an accumulation, so say for example, if you're looking for a buy, you need to look at the seller's climax point of interest and the automatic rally. And if you're looking for a sell, it's the buyer's climax and the automatic rally.
Thank you for
That's why
that.
you have the like you said, the what do you call it? The three times three, or if I'm not
The
mistaken,
the
Power of
power
three.
of three.
the power of three. Um, let me just I'm gonna just show this one time only. So this is this whole thing over here is a Wyckoff schematic. Okay. So
Mm-hmm.
you have your preliminary support right here. You got your buyer's climax, okay? Your automatic rally, and then your up thrust. What did I mean by focus only on the AR or the BC? You can see we got a rejection of the BC. And then if you drag this across, look at what happened once price broke out. You get this whole move. Now, here's another one. If you're looking at from a selling perspective, this is your preliminary support right here. Your seller's climax, your automatic rally,
Mm-hmm.
and then this is your sign of weakness. And then, yeah, this is basically not irrelevant. But look what happens when you drag it across. Do you see how price respected? But then look at this.
Mm-hmm.
So if you're looking at the 3 pushes or the power of 3, it's actually this 1, 2, 3.
Also, it wouldn't be okay, so that accumulation that Asia did, right? The manipulation that the third, I mean the second is not the
Yes. And
that's not 3 that's going up.
which one are you looking at here or
No,
here?
okay. So, oh yeah, so that's not 2. So I see Asia as 1, right? That circle is 1. When that's not 2 going down, and then 3 would be that distribution, so you have it as a V, right? You have the circle, then you have a line going
Yeah.
down, and then you have the V. I mean, you have the second leg of the V, right? Wouldn't that be
Yes.
that's number 3, right?
Yeah.
Is that that's the distribution?
Mm-hmm.
Okay, I was only asking because I wanted to make sure I was seeing it properly because you have the top.
You can
Wait, you just
see.
deleted it. You had it up
No,
here.
hold on. What I'm trying to tell you is, you see, I didn't count this as 2. You see what I'm saying? Because in the Wyckoff schematic, okay, you're not looking, this for me is a sign of weakness, meaning that price wants to go lower. You see what I'm saying? So,
Okay.
but at the same time, if you look at this on a lower time frame, this is a buy. Now, if this is how I see structure, okay?
Mm-hmm.
Okay. A lot of people may not see structure like this, but the reason I do that is because once you do that and you see a point of a level where it's been resisted, look what happens. Then you got a drop.
Yeah, and I think it's maybe like so that for me would be a change of character, and that looks like an imbalance, and I would
Yeah,
have
but
sold from that area.
yeah. So this right here on a higher time frame would be a bearish engulfing. And then you got a wick
Mm-hmm.
of the next candle that pushes up and then a continuation. You see? So
Mm-hmm.
it doesn't, and I think that's why Andrew is asking you, do you understand structure? Because he probably sees it, I'm assuming he sees it like I see it. Okay. But for me, okay, I know why price rejected here
Mm-hmm.
by just looking to the left. And if you look, price came, this is how I trade, okay? Tapped into my 2-hour point of interest. So now the question, the next thing you're going to ask is, what is going to tell me that price wants to go higher? Now that goes into price action. I need to see what these candles tell me. If you look, after you got the bullish engulfing, price has never broken that low and never broken that high until when? There. You see,
Mm-hmm.
because this in a lower time frame is structure. So if I go to the 5-minute or the 15, there you go. You see, you have that and that. So as price broke above, that was your entry to go longs. So what you need to understand is, and I like the fact that you I don't know if you have your zones marked out the way I do, but the market moves in boxes. What do I mean by that?
You're
So,
you're asking?
no,
Oh,
I'm
sorry.
saying the market
Okay.
moves in boxes. So look what happens when price breaks. So I'm marking the box at the high and low of the previous day. When price breaks, look what happens. You see? So look at this one right here.
Mm-hmm.
This is a telltale sign that previous day's low has been respected. But let's say you don't want to take this trade on the bottom. Just wait for this. So this is basically almost equivalent to when Todd tells you to fib the weekly candle. So for me, that high, so I'm looking at it, that's Tuesday. That's the high of the previous week. And that's the low of the previous week. You see what I'm saying? So for me,
Mm-hmm.
all that matters is that and that. This is my playing field. So having that said, okay, so this is Thursday, this is Friday. If this is your Friday's high, common sense, what's going to happen? If price does this and breaks this high during London or New York, what do you think price is going to do? Continue. You see?
Mm-hmm. Yes, sir.
So if you look at all these structure highs and lows of a session and you fib it, you will see that it is very equivalent to the fib. So I'm just going to mark this here now. Okay, look.
Mm-hmm.
I'll take the fib. This is your golden zone. Todd, correct me if I'm wrong. This is the golden zone you're looking at. So it's all a matter of, and I agree with what Andrew has said. If you find a strategy that's good for you and it's working for you, and I think Leandra even said this, just stick to it. Just refine it. You don't need to overcomplicate it because we as human beings, we're stupid people. We like to complicate things. You see? But at the end of the day, trading is very simple. It's just we as human beings like to complicate the
Hey, hold
crap
on.
out
I'm happy I'm not a human being, you know?
of it. So just like if you can relate to Todd, stick to Todd. If you can relate to Leandra, stick to Leandra. But don't try to switch it up just because you found something that's interesting to you, because that's not going to work. That I call is the shiny object syndrome. You go for the next shiny thing, but probably that next shiny thing is not good for you. You see?
Hey,
Yes, sir.
hold on, Nawaf. Look at this price action right here, right?
mm,
So she was saying something about accumulation, manipulation, distribution, right?
mhm.
So she knew that this is an accumulation, right?
Yeah,
Na
exactly.
Naima or something. Am I right?
Yeah, yeah, she saw that.
And this
Yes.
was your manipulation, right?
Mm-hmm.
hmm
Yes.
And this was your distribution.
Yeah.
Yes.
Correct. Now, there is something you are not paying attention to regarding this AMD right here.
Mm-hmm.
The other thing that you didn't pay attention to is your liquidity, right?
Yeah.
This is your buy side liquidity. This is your sell side liquidity. This is another thing you don't pay attention to. After the sell side was run, price rally up to run the buy side into where? Your inefficiency.
Yeah,
Yeah.
I saw that. I would be closing right there and I would wait. That's what I was saying. The manipulation would happen during London, right? And I would look for an order block or I would look for an FBG um, on a previous, either on another time frame, or I would be looking for a previous structure, right, in order to see where price is going to distribute. But that would, I mean, I would just, I don't see the date or the time. I'd have to go back and study that. But it looks like for that particular um,
Wait,
move
hold
right
on
there.
now. Hold on. Keep on.
Go ahead, Naima.
So for me, the way that I see the chart, right,
Ain't
is
nothing wrong how you
the
see the chart. You seeing it perfectly fine. It's just a matter of just refining what you need to look for. And based off the questions that you're asking, it seems like you're having a difficulty. Correct me if I'm wrong here, Naima, okay? You're having a difficulty understanding when is price going to reverse.
Well, that was for that particular move that Leandria and I were
Yeah.
discussing. And so, uh, what I like I was saying earlier, adding the higher time frames and using the fib on the higher time frames will help me to refine my entry, right?
Yeah.
And that's I know for me, at least for right now, because I do agree with everybody here that, I don't need to be adding a bunch of stuff to what, I've already been taught.
Mhm.
Um, had a great person, that teaches me, right? But
Yeah.
I'm not, I'm always open to learn something different. You understand what I'm saying? So when I saw that Todd used higher time frames and that some of the moves that I may get into may be retracement moves, right? Um, and I have a tendency to hold trades longer. I said, well, if I could just get more acclimated with using the daily, the weekly, even the monthly, then I think that it would help me with my intraday trading as far as like being able to hold positions or getting in at a more at a cleaner spot. So
So
as it
holding
relates,
positions, Naima, you see, it's now every time that you keep um giving me your train of thoughts, I'm clearly gravitating to the point where you're missing something when it comes to structure. You see? Because at the end of the day, structure, okay, I'll give you an example. So you said, when is the best time to enter? Okay. It's so let's say price does this. Hold on.
no, my issue is exiting. That
Yeah,
like
I'm
that.
I'm I'm getting to it. Just give me a second. Okay. Let's say you enter the trade around here.
Mm-hmm.
Okay. And you got, this is a perfect example. Okay. Say you enter the trade here. Okay. And price is doing this right now. Would you get out the trade?
I wouldn't enter that, to be honest. I would wait because right now price is accumulating. So I'm not going to enter in an accumulation phase.
Okay.
I'm
So
going to,
hold on.
I would,
Say price does this. and you entered, would you get out?
I wouldn't enter there.
No, say you enter. Okay, so you would have entered here, right?
No, I wouldn't enter anywhere. I would have entered if price did this, right? I would be entering. You see where that shot in price is right there? I'm entering. So that's accumulation, right? That's to induce buyers, or that's to induce sellers, right? There
Mm-hmm.
is a surge in price below. I'm going to enter in on that surge of price because that looks like there's an imbalance there. I'm not getting in on that accumulation.
But what if you get a bullish engulfing right here?
I'm not going to enter there.
Okay.
I'm going to get in on the imbalance, or I'm going to get it on the order block. I'm not going to, and the times when I've gotten on during the accumulation phase, right? That's where I've blown accounts. That's where, and that's just me. That's what I have to work on, especially with US 30. It's it could trick you, you know,
But you
and you
see,
can think that.
and now this is what I'm trying to show you. You see, because, okay, if price has taken everything that it needs to take, you're looking at liquidity here that's been swept, and liquidity here that's been swept.
I understand
Oh,
that, but what I'm saying is I'm not getting in there. I'm not getting in any of that. That's not wise. Even ICT says it. I could share the video. He says not to get in during the accumulation phase.
yeah, exactly.
So I'm
Because
not entering, but you're asking me if I'm going to enter there, sir, and I'm not going to enter there. There's nothing there for me to
you're
enter.
seeing this on a lower time. I'm assuming that you're seeing this on a lower time frame. Picture this on a higher time frame. That's what I'm trying to say. Because yes, obviously you're not going to enter this on a lower time frame. But if you see this on a higher time frame, this is what Todd is trying to tell you. All you need to do is fib that and wait for the pullback and a continuation. Leandro, correct me if I'm wrong here.
Yes, I understand what you're saying. It's so what's called again? Chalk. It's just different for it's just a different way of saying chalk.
Yes.
Don't
And
get
this is
yourself
what
confused.
Todd is trying to teach.
Yeah, don't get yourself confused because we all trade kind of similar ways, but then it's just different language that we're using to explain it. So don't confuse yourself or get confused with what
Because
well, it's good information, but I'm gonna have to jump off soon, guys. But thank you so much.
no
All right.
problem. Because this is going to
So
be
I
ending
do
up.
have a better understanding because you're saying it's from a higher time frame. Then that's
Yes.
different. But now I would never jump into that from a lower time frame.
Of
But if
course you
that's a
wouldn't.
higher time frame, I would possibly, it just depends. I would have to see it. But yeah. But I think I kind of understand what you're saying, sir. I think.
I think you should just stick with what you know and just ride with it. Do you journal, by the way, Naima?
No, that's something I got to get better at is like
Oh,
journaling every day. As far as just not just the trades that I've taken, but just where I'm at emotionally and stuff like that. So
yeah,
that's something that
it's very, very important, Naima, because as you journal, and so say, for example, what's your favorite pair?
my favorite prayer.
Okay, let me rephrase that. What's your
I
most
use,
profitable pair?
well, I only trade US 30, and then sometimes I might trade I might look at NAS occasionally, but it's usually US 30.
Okay. Over time, if you okay, don't get this the wrong way. And I always ask this question to everyone. Do you know how to journal?
Yes, but I'm open to any wisdom that you might have because like I said, I'm looking to get better. So
So this is the
I mean,
this is the
I do
format.
know how to journal, yes, but go ahead.
So first is the date, and then the pair. Okay, and then you put the session, and then confluence, and then your RR, and lastly, feelings. Okay. Now, over time, as you accumulate data on a certain pair,
Mm-hmm.
you will start realizing your confluence for a winning trade will align with a certain session. These two right here, the session and confluences, play a
Mm-hmm.
very important role. They basically piggyback off each other. You see? And the only way you're gonna know what is okay. In order to understand if a pair is good or not for you, it should accommodate your lifestyle, not the other way around. And that's the reason why on my chart, you only see gold.
Mm-hmm.
The reason for that is because it moves on every time frame. And through the data that I've accumulated over time, I noticed that most of my winning trades are during New York. You see, and for
Oh,
me,
yes, sir. I get what you're saying. Yeah, I trade the New York session. Me trading London, there are a few times where I like catch the move at the bottom, but I'm
no,
trading, I
just
don't
hear me
trade it.
out. Hear me
Oh,
out, Melanie.
okay. I'm sorry. I apologize.
No, you good, you good. So the reason I could trade London, I'm awake for all sessions, by the way. I'm in the Middle East. I'm Bahrain. Okay, so
Okay.
I'm literally awake for all sessions. But the reason I don't trade London is because this time right here is the most hectic time for me at work. The reason I
Mm-hmm.
trade New York is because I'm literally home an hour before the session opens. So I got time and focus on my hand. You see where I'm going with this? I'm not saying that I can't trade London. I can, but I'm not going to be as focused. And according to my data, 7 I would say, out of 7 trades, if I took in London, I would be maybe 2 or 3 would be winning trades. And then when I'd go to my feelings, I'd realize that, oh, I'm stressed or work is hectic or, I had deadlines to meet. So it's clearly showing me that, you know, my mind was not completely focused on the chart. You see where I'm going with this?
Yes.
So it's very, very important. Like trading journals, I'm a advocate for it because it will teach you your bad habits as well that you have. You see?
Yes,
Um,
sir. I ended up getting, because I had like a rough period. Like I had a
what?
good period, then I had a rough period. And so I was like, I ended up getting TradeZella. And so I just have to be disciplined to use it every day or whenever I trade. So
But
I'm trying to make sure.
you do know that trading, like losing trades are part of the game, right?
Yes, I just have to learn how to trade, lose gracefully. That's it.
Yes, exactly.
That's what I.
That's all. That's all it is. Um, so a mentor of mine who's like a father figure to me. He told me you do not control anything in the market. The only thing that you can control is how much you lose. If you master that, you'll go a long way in the market because that is the only control that you have is your stop loss and how you manage it. So if you can manage that, yeah, you're golden. You see?
Yes, sir.
Um, But yeah, Leandro and Andrew said things that hit the spot. Trade the way you feel like you should trade. Like if you can resonate with Todd, don't listen to anyone but Todd. You see, if you are seeing changes in your trade for the better, stick with Todd. You see, like for me, I only came on Zoom today because I had an afternoon nap, so I could not sleep. Otherwise, I wouldn't be on this Zoom. The reason for that is nothing against Todd or any of the trainers over here. I just don't want to divert off the way I trade. You see, because that's the way I trade. I'm not going to reinvent the wheel. There's no point. It's making me money. You see, so yeah, just keep grinding. That's all there is to it, you know. And if you get beat down by the market, that's just the way of the market telling you, humbling you and telling you, you know, maybe you need to look at what you did wrong or differently compared to the other trades. That's all. That's
Yes, sir.
literally it. You don't need to beat yourself up on it. You know, just wake up the next day, take a day off, 2 days off the market, clear your mind, and just get back on the grind. How long you been trading, Naima?
I don't count 2021. I think I was gambling then because I didn't know what I was doing. But I started in
It's
2021
okay.
and